actually looking pretty positive. People in general are thinking that we're just going to tolerate some moderate inflation. The problem's going to be is when people realize, wait a minute, look at these inflation numbers, they're coming back up instead of going down more. I think what you're talking about, the UK, is a perfect example.
So, Katie, I think what we're trying to figure out is whether the high yields that you predict are going to be a challenge or not to the narrow leadership so far in the equity market, which has been dominated from big cap growth. Is that a challenge or not?
Definitely. If you think about growth, I mean, growth has struggled a lot, and it was the most impacted sector during last year. And now that we've had a little bit of a slowing in interest rates, they've seemed to really raged back. So you're right. If we do see longer term cash flows go up, that is the sector that could be the most vulnerable because it has the most duration risk.
Well, that would be a big challenge, Tom, to the index level gains of the year so far for the NASDAQ, which is up more than 30. Katie, how would you explain then how resilient the index level story has been? Let's take the NASDAQ, which had, I think, one of its biggest weekly gains of the year so far, just last week on the NASDAQ 100, despite this move that we've seen in the Treasury market. What explains that?
Well, I personally think we're only reverting back to recent highs in yields. I'm looking for a breakout. I'd say that we've just seen a little bit of movement in fixed income relative to where we were earlier this year. And that's why we see a resurgence. So I'm much more thinking about the more extreme scenario as opposed to a small adjustment back towards the high. Remember, the 10-year went to 4% earlier this year. We're not back at that level yet. So I'm kind of watching for that more than sort of the tech resurgence after a period of really, really strong tightening of rates, which we saw last year.
Katie, let's go all CTA. Commodities. Help me here. The commodity trend is lower. Copper's off a cliff. It's a China play. I get all the fundamental chat. What does the trend following look like in long trending, persistently trending commodities?
Well, this is a good question because commodities have also been decoupled somewhat from equity markets. We've seen downward pressure in commodities, particularly the base metals, also energy. One thing I've been watching quite a bit is the energy trade. I mean, we've seen a massive downward trend, and there's all sorts of questions all the time from investors. Well, when are we going to see that move up again? So for right now, it doesn't look like that's going to happen soon, but it is something that has been in a downward trend for a very long time, which could, if we see some sort of movement, there could be something there. But you're correct. Commodities have been trading recessionary, equities have trading optimistic, and treasuries also somewhat optimistic in terms of where yields are.
Katie, this was great. Just to clarify your thoughts on some things. Katie Simplex, Kathy Kaminsky there of Alpha Simplex. It's going to be a new name. Short treasuries.
I like it.
That would work, wouldn't it? Short treasuries. Right now, TK, is the trade for Katie Kaminsky of Alpha Simplex.
I made a Red Sox allusion there. This is where Alpha Simplex comes from is trend following. And this is John Henry of the Boston Red Sox and others, Monroe Trout down in Bermuda, ages ago, trying to figure out setups to get on trend, John. When do you get on trend? When do you go long or short, whatever the trend is? And just as importantly, when do you get out? And if you go to cash, what do you do next? And it's a real study. It's literally a cottage industry within the investment field. It's not something the CFA program that I'm part of follows closely. But for all of us, John Henry pounding out spark stations, Sun spark stations was done on. And then one day it showed up in the Bloomberg, and I'm like, oh, ADX DMI in the Bloomberg. Oh, parabolic SAR. And there I was doing my own Katie Simplex ballet.
Just quickly on cash. If you've been enticed into cash with 5% returns, TK, you know the tough thing about cash, it's
got to get back in.
How do you get back out of it?
It's
or do you just stick
wildly
with it?
Asymmetric. Getting out of an investment into cash is easy compared to I'm in cash. What do I do next?
It's attractive at 5%, and then you start seeing these gains in the equity market, and
there
all of a sudden 5% is not looking as good as maybe it did at the start of the year. Lee Ferriger, State Street, joins us in the next hour. Looking forward to that conversation. The latest from Washington, D.C. with AMH down in the nation's capital. Up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. Now, in exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. Sources tell Bloomberg that the Tesla chief is expected to meet with senior Chinese officials, including Premier Li Qiang, as well as visit Tesla's Shanghai factory. The EV maker is nearing the final stages before starting trial production of its revamped Model 3. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. NVIDIA is set to become the first chip maker to achieve a $1 trillion market capitalization. The company's blowout revenue forecasts underline the enormous growth potential from artificial intelligence. NVIDIA is poised to be one of the 5 U.S. companies with such a capitalization, joining Alphabet, Amazon, Apple, and Microsoft. Only 9 companies globally have ever achieved this level. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think this agreement frames all that from limit, save, grow. It doesn't get everything everybody wanted, but that's in divided government. That's where we end up. I think it's a very positive bill. I think at the end of the day, people can look together to be able to pass this in the House and the Senate together.
The agreement prevents the worst possible crisis, a default, for the first time in our nation's history. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
The big push begins right now down in the nation's capital to get this bill, this agreement passed. An agreement between the House Speaker Kevin McCarthy there and the President of the United States speaking over the weekend. I think on Wall Street just moving on, at least trying to anyway, and leaving this one behind. Goldman Sachs reflected on their note from over the weekend a couple of times this morning. We can do that again. Called it a major reduction in uncertainty, a minor reduction in spending. And that's the takeaway, Tom. The spending deal looks likely to reduce spending by something like 0.1 to 0.2% of GDP year on year in 2024. 2025.
You know, so Speaker McCarthy was talking there late at night. There was the congressman from the Carolinas, Patrick McHenry, without his bow tie on. I thought that was just bad form. I mean, you know, you're in the exhaustive move of a debt bill. You got to be tonsorial and resplendent.
That's what you were focused on over the weekend.
It was bow tie on. It's like, it's tough sledding.
What's the
down
signal
in
from
Washington.
that? They've been working really hard.
They're exhausted.
They're exhausted.
Working very
Right,
hard.
okay, great.
We can take our ties off now. Hotzies wouldn't let us do that. Let's move on right now and get some important perspective here. Anne-Marie Horton is a Bloomberg civics lesson correspondent in Washington. Anne-Marie, best paragraph I saw on how silly the power game is was in the Washington Post. I'm going to steal this from Jim Garrity, writing it up. I believe it was yesterday. It maybe been the day before. And Mr. Garrity says, in the end, neither side had the leverage it wanted others to believe it did. Republicans still control only one chamber by a narrow majority. If they want deeper cuts to federal spending, they need to win a Senate majority in the presidency. Anne-Marie, can you take this out to the election of 2024? That's really where this is going to get decided?
Well, I think Speaker McCarthy is trying to make that point, right? We're in a divided government. We only hold the power in the House. And if members of his, like the conservative group, especially on the hard right, who some are even threatening to vote no against this agreement he struck with the president over the weekend, what they're going to say is, look, we have a divided government. The Democrats hold the Senate, the Democrats hold the White House, and yet we still were able to enact some spending cuts. And if we want more, we need to win more seats. And I think that goes for the Democratic side as well. The reason why Speaker McCarthy and President Biden both keep coming out and saying not everyone is going to be happy, because they obviously have issues on the fringes of both their parties when it comes to this agreement.
Anne-Marie, I know you've seen Lincoln, Daniel Day-Lewis. I think you've seen the movie 14 times. And Tommy Lee Jones is in there doing his Thaddeus Stevens imitation. And in the 19th century, it's about amendments. Is that what we're going to see here, an amendments frenzy over the next 72 hours?
Potentially. I mean, it's going to be striking the deal and then passing it are two very different processes. So striking the deal was a small group of people. And in the end, it came down to a 90-minute phone call when it was finally done between the president and Speaker McCarthy. Now, getting it through the House and the Senate is going to be very challenging in some parts of the process. So today already, one potential challenge is the Rules Committee, where you have some Republicans that are very conservative that may vote no to even get the bill on the floor. That could be the first hiccup. But by and large, many do see this passing through the House. Then potentially the Senate is where you can have amendments thrown at it, and it could just make the process so much longer. And the risk only there is that this really comes up against the June 5th deadline, which the Treasury Secretary says is not as soon as the U.S. could default. She has really said that this is a hard stop deadline. And that's where the concern is, because you heard the likes of Senator Lindsey Graham over the weekend. He was speaking to Shannon Bream on Fox News Sunday, and he was very upset about the defense spending. Now, defense spending looks like it'll increase about 3%. But what he says is that's nothing when you look at where we are with inflation numbers. And he doesn't think it's enough for the U.S. military. So you're going to have individuals want to come out in the Senate. Of course, you can have them filibuster. So this is where potentially you can see a very long, drawn-out, cumbersome process. But by and large, everyone I'm speaking to, the analyst notes that we're all reading, it does look like this is going to pass.
AMH, you mentioned one name there. Who are the other names you're looking for through this week?
Well, this week, I think first we have to start with the House, right? So I'm looking at the likes of Chip Roy, a Texas Republican, when it comes to what happens this evening. So today at 3 o'clock, you're going to have the Rules Committee. Do they give the go-ahead for this to even get on the floor? And then Speaker McCarthy is holding an in-person meeting with the entire conference. And that is where he's going to really hear those that are begrudgingly going to have to potentially vote for this and try to convince others to get this over the finish line. Then, of course, on the progressive side, it's the Progressive Caucus, like Pramila Jayapal, the House chair of that caucus. Where does she take her Progressive Party? Are they a hard no or could potentially get on board? We do know that the president and his main surrogates are calling these individuals. I think by yesterday morning, at least 60 House lawmakers the White House had already called. So both sides are really trying to back channel into the House. And then on the Senate side, I would say Lindsey Graham is one to look out for. Mike Lee had said early on that he would make the process very difficult if there wasn't steep spending cuts. So these are really the individuals to keep an eye out for.
Anne-Marie, let's finish where we started on the presidency, the race to be the president in next year's election. Bipartisan deals are probably good for the sitting president going into that campaign. They're arguably bad for the speaker's future in the House. What do the Republican candidates for the presidency think about this deal announced over the weekend?
Well, it's very clear Governor Ron DeSantis thinks of it. He says that we're nearing towards bankruptcy, and this deal doesn't help that. And he was on Fox and Friends in the morning, kind of bashing this agreement. We have yet to hear from the former President Trump, who, of course, made that statement, who said that the Republicans should get deep spending cuts or default. But we do know that he has been speaking with Speaker McCarthy, because there was a New York Times article that said that the president ran over or saw a New York Times reporter while he was golfing and was brandishing that he had Speaker McCarthy on his phone and had a chat with him. We haven't heard from him yet, so potentially the former president thinks this is useful for them. The one thing the speaker does have, Jonathan, though, and I know there's a lot of talk of whether or not, because this isn't the deep spending cuts many on his far right flank wanted, does this mean that he could be ousted? He was able to get the president to the negotiating table. The White House thought they can just have a clean debt ceiling increase. And what McCarthy was able to do was keep his party together. The Wall Street Journal editorial talks about this unity that he was able to have was the leverage he was able to use to bring Biden to the table. So even though many don't like the bill, I think they do see that he was a successful speaker in this arena.
AMH, with the update, the recap down in Washington and the push forward as well. Anne-Marie, thank you. On the latest, TK, and the politics we're all excited for the next couple of days. Wall Street just wants to move on with this. Let's get it done. Let's just move on.
And with respect to this, John, we are so in the modern age driven by cable TV, this show, that show. I don't want to get into a political debate about it. Anne-Marie's living it every moment down in Washington with our team. But the answer is, heaven forbid, there's now a civics process. And it's not like they can tell a committee, oh, go away. There's actually a process, particularly for our international audience. There's a ballet here that is in place, and we have to go through. And what's interesting down the road is the Senate after the House and the potential of a filibuster, which is its own conversation.
And they've got to get moving, Tom. We talked about the Treasury cash balance just south of 40 billion at last look. That number's come all the way in from north of 140 only a few weeks back.
I mean, I'm getting ready for a sell in May and go away equity market banner. That's going to look great, but I mean, May's almost over. I mean, June is busting out all over, and with a jobs report as well. So
where's May gone?
It was cold spring, and it has been beautiful in New York the last number of days.
You seen the pollen count?
It's been a lovely May.
Everyone just walking around sneezing.
I don't get the pollen thing, and I'm sneezing.
Everyone's just walking around sneezing.
Yeah.
Wiping their noses.
Yeah. That bill has it, it's terrible.
Oh, the dogs have got it too?
The dogs get it too.
The dogs have got hay fever?
Oh, yeah, the dogs get it.
Okay.
Absolutely.
Ed Al-Husseini of Columbia Threadneedle. I never know if you're telling the truth or not.
It's true.
The dogs are sneezing?
Yeah, dogs are sneezing.
All right. We'll catch up with Ed next on this bond market and the T-bill issuance we may get in the next few months.
connection lost.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Equities on the S&P 500 positive by 0.5%, a lift in this equity market with one name in mind, NVIDIA. Let's take a look at that name right now, up by close to 4% and really, really close to this $1 trillion line in the sand. TK, look how close we're getting. 404.86 is the magic number, 404.18 right now. TK, we're basically there. $1 trillion market cap for this name.
Sell side, 9 months, 12 months hold. Can you buy it here? An institutional approach. Can you hold it or buy it here with a 3 or 5 year hold? I have no opinion. I'm not qualified on this. But yeah, I get the fixation of $1 trillion, but what do we do with it now other than listen to the CEO who's quite articulate about the dream?
I was asking the same question 2 weeks ago, a month ago.
Where do you think I get all my ideas?
When it was up 80, 90%. And now it's up more than 100.
Hold your head, please.
Let's keep going. In the equity market, this is what futures look like. The S&P, the NASDAQ, a lift. The NASDAQ up by more than 1%. Year to date, the NASDAQ 100 up more than 30%. We're going to add some more weight to the rally this morning, potentially on the S&P 500 as well, up by 0.5%. In the bond market, the move higher. Got to keep going back to this. The shift higher we've seen in yields hasn't hurt this equity market. The 2-year retracing some of the move higher we've seen over the previous 11 days. We're down by about 4 or 5 basis points on a 2-year to 451.63. On 10s down about 8 basis points to 372. It's like debt deal, move on, and quickly. The cuts to spending, not that big. The hit to growth,
well, like
not
Goldman
that
Sachs
large.
said, we're clearing out, the rumors and the speculation, the worry, the angst.
Yeah, we're talking about basis points type stuff, Tom. For cuts to spending. I want to finish on foreign exchange. We did break 107 earlier today on the euro, 106.73 on that currency pair. The lower the session, 107.31. Story of the moment, I think, over the last several weeks. High yields, dollar strength kicking back in, but as you were in the US equity market, just exceptional performance from a handful of names. AI, the theme to cling on to.
I'm watching Argentina and into the news here. I believe Damien Sassower darkens the door at some point. After Erdogan, lira goes out weaker, 20.39. Mehmet Simsek is rumored to be in the new administration, the new government of Erdogan. That would be, for
good?
the West, that would be a good thing.
That's good.
Ex-Merrill Lynch, he's really competent. I've spent a lot of time with him. And clearly he's someone where the Western banks would be very happy.
Does that matter when we all know there's one man essentially in charge?
I don't know.
Of policy, of the central bank,
I think
of all of the above?
Take the show to Istanbul,
That would be fun.
Ought to do after this important election. Right now, we're going to take the show to Smart. Ed Helsani joins us, senior interest rate strategist at Columbia Threadneedle, Colgate Cricket from a long time ago. Ed, what's the biggest stereotype of bond market equity linkage that's wrong? What's the thing that everybody talks about, correlations, linkages, blah, 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 but it's just flat out wrong?
Yeah, I think if you look at the last 18 months or so, the big shift has been equities and bonds becoming positively correlated. That makes portfolio construction very difficult. It makes it very difficult to hedge drawdown risk with treasuries on high-quality bonds. That relationship is starting to break down, and we're starting to return to sort of a pre-COVID environment where bonds were, in fact, excellent hedges against risk drawdowns. And that's the change we're going through at the moment.
What is a likelihood? We just had on Katie Simplex, and she made it very clear that her likelihood, her trend, her bet is lower bond prices, higher yields, because no one's looking for that. How do you look at an outlier thought like that that's clearly away from consensus?
Look, I think there's room for inflation to surprise to the upside. I think that would be the catalyst for something like that. In my mind, I think pricing is pretty decent. We've repriced terminal rates for the Fed a little bit. We've given them a little bit more room to stay on hold in the second half of the year. I think that's the right place for us to be. And I think more importantly, if you look at real rates, things like 5-year real yields now close to 180, that's pretty restrictive policy. And I think that buys the Fed a lot of room to now transition to a pause.
Let's fold in the agreement over the weekend. Does that change the character of growth in any way, shape or form, the marginal cuts to spending that have been announced?
I think it's quite limited. And, particularly when we look at this setup versus 2011, when the economy was depressed and the fiscal shock was much more negative and had much higher multipliers into the growth story, that was close to 0.7, 0.8% of GDP for several years. We're looking at something like 0.1% of GDP now. It's a rounding error in this environment.
It's going to lead to more T-bill supply if we pass this. I'm sure you've already seen some of the takeaways. Hundreds of billions of T-bill supply coming to a market near you. It's going to cause chaos in markets. Let's go through things point by point. How does this work? From Treasury issuing T-bills to it bleeding through the whole system, what happens?
I think there'll be a fair amount of demand, particularly from money market funds. Government money market funds have been on the sidelines here. There might be some drawdown in repo and reserves on the Fed's balance sheet. That, in essence, is the process that we've been in since quantitative tightening started. That might accelerate the process slightly. But by and large, this is really a matter for the front end, the cash management part of the Treasury market. When you look further out, for the vast majority of investors who are trading credit or treasuries, this should not be a significant event.
It comes at a tense time, or at least the hangover from a tense time in the banking system. Does it compete with bank deposits? Does it exacerbate any of that tension at all?
I think the correct answer is it could. But by and large, look, bank deposits have been bleeding out of the system for some time. That process is going to accelerate. They've been in competition with money market funds. You will hear people talk about things like the deposit beta, which is, in essence, banks are now under pressure to raise the interest rate on deposits faster than they've been pre the SVB shock. Does this change that equation? No, not really.
Sir Vance, correction, I had Sassar with us. He's out at Marlins Yankees in Seattle and didn't want to get out of bed too early, so I guess Damien's not going to be with us. So we're thrilled you're here to talk the opportunities in EM. Long ago and far away, Ed El Husseini spent February in the Bahamas with Moody's. It was a really tough gig. It was amazing how you made the trip. In February, you did Latin America, Chile. Nobody's talking about the Argentinian mess, the IMF workout, what they're doing in a swap agreement with China. You're the adult in the room here. Is there an opportunity in Turkey, Argentina, and the other idiosyncratic stories of the moment?
I think there's a long tail of idiosyncratic stories in EM that are currently going through a restructuring process or are priced for a restructuring. And I think particularly in hard currency EM debt, that's a really interesting story. I mean, we have bonds in, Pakistan, Sri Lanka, Ghana, and so on, Egypt, that are priced, 20, 30, 40 cents on the dollar. They've now priced in a very aggressive restructuring. And so looking forward on a 2, 3, 4 year horizon,
right.
Outcomes there look quite attractive. Argentina and Turkey, boy, the policy mix in those economies is so difficult to solve. And they've been struggling with it really for decades at this point. It's difficult to be super optimistic. It's difficult to see an exit, a way out, the way you have with some other EMs.
What does the dollar do here? Does the dollar fold into bond analysis here? Like if you get a weak dollar like in equities, does that help you?
I mean, a weak dollar would really, in my mind, start to coincide with the Fed starting to be priced for an easing cycle, for the economy starting to roll over, particularly with labor market weakness starting to lead that story. Is that on the horizon at the moment? Not really. If I think about the next 3 to 6 months, if we think about the end of the year, beginning of next year, potentially. In my mind, the dollar is largely range bound. I'm not super excited for the dollar in either direction at this point.
Can we get the fixed income guy to comment on what's happening in the equity market right now, just quickly? NVIDIA at the moment at 404.70, briefly through that line in the sand of a $1 trillion market cap. Ed, for most of this year, we've talked about cash no longer being trash. It yields 5%. Are we getting to a moment where the gains are so large in the equity market in some places that some people are coming to you and saying, yeah, about that, I'd like to go somewhere else?
Look, I think greed is a very powerful operator when it comes to risk. It doesn't really matter if it's equity or credit risk, and it's in play. And the one thing I'll point to is, to a large extent, real rates and interest rate volatility was a very negative drag factor for both equities and credit risk last year. Right. That's starting to go into the background. So you're starting to see, we're starting the conversation about correlations. This year, that increase in real rates really hasn't damaged things like equities, particularly tech stocks, that much. That, to me, signals a regime shift here and is very consistent with the Fed nearing the end of the hiking cycle.
Let's sum this up. 12 months forward, do you have the scissors out clip and coupons, or can you actually manage for total return?
I think you can manage for total return. I think bond prices, starting where they are today, plus the carry, the yield, the starting yield here, very attractive, both in real and
how much total return are you going to slap in a coupon? 100 beeps, or can you do better than that?
Boy, I mean, if we're talking about...
No one's watching. It's Tuesday after Memorial Day. Come on, stay with me here.
Look, I think we're finding very attractive value in short duration investment grade debt, even in higher quality, high yield debt in EM. Can you manage for total return well in excess of coupon? Absolutely.
John, February 8th, this is the old Ed, the Internal Medicine for Primary Care Convention in the Bahamas.
Was that where Ed was?
That's where Ed was. He used to go down for Moody's and say, he'd go down and analyze the Bahamas in February.
We're doing it all wrong, aren't we?
You got that right. It's just, what could you say?
Ed, this was great. Thank you, sir. Fantastic. Good to see you.
Thanks, guys.
Al Husseini there of Columbia Threadneedle. On the competition between bonds and equity right now, there's one winner at the moment, NVIDIA, up by 3.8%. in the pre-market. TK, watching this one over the last few weeks, just tick for tick. It's been phenomenal.
And dragging the NASDAQ with it, up 1.3% on the NASDAQ as well. I want to make this clear. Why is Ed so valuable? Because we do economics, finance, investment, and he blends the two in, international economics and the macro babble, into what's actually going on with money. And there's not that many that can do that. Michael Darter would be another example.
On the equity side, I'm thinking of Andrew Sliven right now.
Yes.
Portfolio manager at Morgan Stanley. Conducted a really nice interview with the team here at Bloomberg going into the weekend. what happens if you get to September, October, going into the fall, and you've got these kind of gains on the screen and you didn't anticipate?
He is
That's what
so
Andrew's getting
dead
at.
on. We call it window dressing.
It's only
CFA
May.
level
I
two.
will say it's still only May. Let's see how this goes. Coming up for the next hour, looking forward to getting Greg Vallier's view over at AGF on the debt ceiling deal down in Washington,
You've been to
D.C.
the Bahamas? I've never been.
I've never been.
Never been.
Never been.
Road trip.
Do you want to go?
Yeah, absolutely.
Okay.
Take the Bramo. Take
All
the
right.
Bramo. Cam.
Take the Bramo.
Take Bramo. Take
Take
Bramo.
Bramo.
Cam.
If Bramo comes back,
That's
is she
true.
back tomorrow? I heard a rumor. She
haven't
might
talked
turn
to
up
her.
for payrolls. We'll see. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars of weapons from its U.S. and European allies for the military assault. In Spain, Prime Minister Pedro Sanchez is trying to hold on to power after a crushing defeat in Sunday's regional elections. Sanchez supervised his adversaries Monday by dissolving parliament and triggering a snap general election within hours of learning the full extent of his losses. Spanish parties will have less than 2 months to prepare for the campaign and the July 23rd election, which has been expected in December. When Jamie Dimon takes center stage at J.P. Morgan Chase's China Summit Wednesday, he'll face a business landscape that looks vastly different from a visit 4 years ago. In 2019, the last time the flagship event was held in person, the U.S. bank and its Wall Street peers were gearing up to cash in on China's opening of its $60 trillion financial sector. Today, U.S.-China tensions are high. The Chinese economy is sluggish, and Beijing is cracking down on foreign businesses. Deutsche Bank says its hiring spree in mergers and acquisitions will help it boost ranks and take back some market share from its Wall Street rivals. The German giant has signed on M&A veterans from peers including Bank of America, Credit Suisse, Lazard, and Citigroup over the past couple of months, and plans to hire more. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory. 15,000 startup companies in the world building on NVIDIA today, and 40,000 large companies, enterprises around the world are using accelerated computing. We have now reached the tipping point of a new computing era.
Every time this guy speaks, we add tens of billions of dollars to the market cap of NVIDIA. That was Jensen Huang, the CEO and co-founder. NVIDIA is the winner of the S&P 500 year to date so far, up more than 100%. It's up 3.8% this morning, 404.30 in the pre-market. I've said this a few times this morning. I'll say it again. If you are just tuning in, welcome to the program. 404.86 is the line in the sand. That would bring about a $1 trillion market cap. TK, this stock just breaking records all along the way.
For Global Wall Street right now, we're going to dive right into this. Alex Webb blew me away last week. Alex Webb blew me away with Bloomberg Opinion with actual discussion of NVIDIA in English. We demanded he show up Tuesday to get us started here in the morning. Alex Webb joins us from London right now. Alex, you have the single best story on this phenomenon I've seen. You got 5 charts, and without question, the chart that matters is the place of NVIDIA and Novanta and monolithic power system as having expensive major semiconductor chips or whatever. I mean, they're outrageously, the PE ratio is absolutely insane. What's the risk that they lose their premium pricing, their premium margin, their premium unit growth?
It's whether the others can catch up, and that was what was super interesting about the Jensen Huang presentation at Computex in Taiwan, is that he was making a very compelling case for this having a hugely lucrative long tail. At the moment, what we're seeing is the cloud operators saying, we need your gear in order to run the processes in the cloud that ultimately are going to be running the processes that fuel the AI revolution. What he's saying is that the applications for this are massive, and we are the first. We have had the first bite of the apple. We have the best stuff, essentially, is the case he's making. There are a few others in and around there. NVIDIA has been the first mover. They also have their teeth in pretty deeply with those cloud operators, which means, you know, essentially, our gear plays best with our gear. So therefore, you need to keep buying from us. And that's one of the reasons we're seeing the stocks bought so highly at the moment. I think it's trading at something like 52 times its forward earnings. That's actually come down as people have revised their earnings expectations upwards. The SOX semiconductor index, Philadelphia semiconductor index, the average is about 25 times its forward earnings. So it's a massive premium on the rest of the market.
I mean, I look at this, Alex, and I go 4 people down, and it's advanced micro devices, which I get as a competition. Do you look at NVIDIA as a duopoly or triopoly, or are they like, say, electric vehicles where there can be 7 or 8 players 2 years out?
The thing that's actually going to be super interesting is a little bit more complex even than that. We're seeing a lot of the big tech companies, the Googles, the Apples, the Amazons, developing their own custom silicon, their own custom chips, ultimately that are manufactured in the same fabs as NVIDIA's are. They're made by TSMC, largely in Taiwan. Now, those are the guys who look most likely to catch up with NVIDIA when it comes to the AI stuff, right? They're having this sort of parallel processing, the clever whiz-bang tech that will fuel everything that AI is able to do. So it's almost like an internal threat, because these are also the customers. Microsoft, Google, Amazon, they're the people who are buying from NVIDIA right now. The question is whether they can do something that does this sort of stuff as well as NVIDIA can. They're probably a few years out, but that looks like the big internal threat.
The timeline, that's where I wanted to go. Alex, you're better positioned to answer this question than I ever will be. How quickly can you be knocked off the top of the pile? How quickly is this thing moving?
I mean, ask Intel. You know, it was 3 years ago that NVIDIA knocked Intel off as being the world's biggest chip maker. It's a slightly broader way of defining it. Now, NVIDIA is about 8 times bigger by market capitalization than Intel is. Now, the innovation cycles in semiconductors, you know, 3, 4, 5 years, it isn't something you can turn on a dime. NVIDIA was clearly coming after Intel for quite a long time, and Intel doesn't compete in the same space. The bigger question actually is whether, even if somebody is able to catch up with NVIDIA, can they get the manufacturing capacity from TSMC? NVIDIA is there, they're the first mover. They are saying, we need this many wafers this year. TSMC, please do that for us. If you're a smaller player coming in there, Does TSMC have the space for you? The answer may be yes. There's a lot of new capacity coming online, particularly at the bleeding edge of this stuff. We also have Intel coming in as a foundry. These are the companies that make semiconductors for other people. So maybe this capacity is getting there. Right now, it certainly looks like NVIDIA has a little bit of a lock on it.
So this is still all down to the capacity, Alex, of Taiwan Semi.
It certainly looks like that in the near term. The thing that we saw, right, is that there's one company in the world in Europe that makes the machines that can make these semiconductors, ASML. TSMC got so much of the early supply of those machines. So they are the ones who can make this stuff for now. The other two companies in the space, Samsung and now increasingly Intel, are coming in and getting more of those machines. That means that in a few years' time, there will be a lot more capacity out there. The question is, who is going to be hoovering it up? Who's going to be saying, we want to use it, we want to make our stuff? They have to run these foundries, these chip-making factories at really high capacity in order to justify the spend. These machines are insanely expensive. So there's a lot of capacity coming online. Is NVIDIA going to be one that's using it all? In the short term, maybe. In a year or two, it'll look a little bit different.
And look at the names in your wonderful article, Alex. And I guess I'm looking for the mini NVIDIA. That's a mouthful. A mini NVIDIA. I don't mean buy, hold, sell. And I'm not asking you to tell me they're going to make a ton of money. But if I look at Entegris or IPG Photonics or Qorvo, if I'm pronouncing that right, is there a mini NVIDIA in your head?
Do you know what? There's a great piece I'll point people towards from our colleague in Bloomberg Intelligence, Woo Jin Ho, and he really highlights a few of the network players, actually. And if I'm going to be honest, I can't remember the exact names.
Well, that's okay, fine.
Point people towards it.
Yeah.
It's not necessarily obvious players. The one thing is actually a shame looking from a British perspective. There was a company called Graphcore, which had raised a lot of venture capital, and including from big names like Sequoia. They were specializing in AI chips. They wrote that stake down in November, and it is looking like Graphcore is nowhere. That was increasingly looking like a player that would be able to come in and challenge the likes of NVIDIA. Maybe their IP gets bought up by someone, and they create a viable challenger to NVIDIA and, of course, AMD.
Let me segue, Alex. You can do it. Apple Computer really buttressed up against a 175, 180. What's the view forward on Apple Q2 calendar, Q3 calendar, and into the holiday back-to-school season?
I think the thing we've seen, there's going to be a lot of chat in the next 2-3 weeks about what Apple does in augmented reality. That's going to get a lot of the headlines. It isn't going to drive any meaningful sales, at least not anytime soon. The reporting from our colleague Mark Gurman suggests that this is going to be a ramp-up comparable to the Apple Watch. Apple Watch now quite a big, compelling product category. Took almost a decade to get there. It's really the stickiness with Apple. They've built so many products and services on top of the iPhone, which in and of themselves make money at a good, healthy margin. Most crucially, they tie people to their iPhone. So irrespective of whether it's a particularly compelling upgrade for the handset come September, October, November, people still upgrade. That is why the stock is so, bid up. There is a massive amount of conviction behind their ability to convince people to refresh.
I haven't upgraded, but I have noticed recently, TK, the battery life just starting to aggressively come down. You seen that?
No, I have wonderful battery life in my iPhone.
Oh, mine's
it's
terrible,
changed my
but
life.
I didn't upgrade it.
The number one reason to upgrade is a battery life changes your day-to-day use of the phone.
Because Tim's in there manipulating the battery levels.
I am old. I mean, Alex Webb knows this. I'm old school on this, in that it's all about the chip, and the chips just keep getting better and better.
It's impressive, eh? This was great, Alex Webb. Thank you, sir.
Yeah.
Alex Webb of Bloomberg. Quick take on NVIDIA. What a run in that name. It's up by more than 4% in the pre-market and heading towards a $1 trillion market cap as things stand right now. 405. Lee Ferriger, State Street, coming up.
Welcome back to a special Roland Garros update for Bloomberg TV and radio from Tennis Channel. I'm Andrew Guy. World number one Iga Swiatek opens up her campaign in Paris Tuesday when she takes on Spain's Cristina Bushka. The defending champion is looking for her third crown at the clay court slam. And American superstar Coco Gauff is also in action. Last year's finalist is hoping to claim her maiden Grand Slam title in the French capital.
most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, and the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
We think where we are is the index is telling you things are rosy, things are fine, and the breadth is telling you otherwise.
Looking at the headline index in general belies some beneath the headline developments.
I wouldn't go chasing a whole lot here. I still think economic weakness, mild recession is in front of us.
Recessions aren't bad things. They reorder capital.
We might get a pause in June, but I wouldn't take a pause to mean that the Fed is done.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Abramo off today, stretching it out over the Memorial Day weekend. John and I are looking at really exciting markets. And John, I think you've been right. I was going to underplay it, but I think you've been right to overplay it. NVIDIA at a pre-market of $1 trillion, it's got to get your attention.
Amazing to see. Session highs,
26,000 employees.
Oh, just amazing. Phenomenal. Gains of more than 100% year to date on that particular stock. It's contributed to some decent gains at the headline level. On the index level, on the NASDAQ 100, up by more than 30% this year to date. This morning, we're up by more than 1%. Tom, the rally continues.
Well, the rally continues in the bear market. I was sort of surprised over the weekend. The bear market gloom wasn't as reaffirming or capitulation, whatever you want to call it. But futures up 25. Let's fold the data check right into this. I'm sorry, NASDAQ 100 with the NVIDIA trail up 1.4%.
Futures up. We've got a debt deal. Treasuries are rallying. Yields are lower. A debt deal that most people just assume doesn't really cut spending by very much, if at all, in certain places. And Tom, here we go. We're down 9 basis points on a 10-year, 370. Yeah. On a 2-year, we've had a big move higher over the last couple of weeks. We're back to about 450. Yields lower at the front end by 6 basis points. And it's back to the data. You can refocus the mind.
Yes.
Get back to payrolls on Friday. Get back to CPI on June 13th and get to the Fed on June 14th. June is just around the corner.
Curve inversion here, early unemployment report this Friday, June 2nd. But John, what I would get back to in terms of yield is what do banks do with CDs? If we do get, some form of yield adjustment, yield stasis, sticky inflation, the 30-year mortgage rate we haven't talked about yet today. The first thing I looked at this morning, 7.17%. It's up, it's up nicely here.
Let's put all these different issues together.
Yeah.
So we've got a debt ceiling deal, potentially passes Congress this week. Let's see what happens. If it does, you get hundreds of $billions of T-bill issuance coming to the market. Does that compete with what the banks are trying to achieve, Tom, which is attract and retain deposits? We'll see how that plays out. Ed Al-Husseini sat in that chair just to Tom's left over at Threadneedle, Columbia Threadneedle, and essentially said that he doesn't think it's going to be a big deal. We'll see how it plays out in the coming months.
Currency market today, let's do that briefly here before we get to Kenilworth Road, and that is euro dollar 107.44. You and I both saw breaking down through 107. And I'm sorry, it's a free fall to 105. We hit it at a 106 handle.
Briefly,
weaker euro.
106.73, the low of the session. 107.44 is where we are at the moment. Touch of dollar weakness against a bit of euro strength, reversing the trend of the last couple of weeks with yields not up but down this morning. But you took us to Kenilworth Road.
Good morning.
So let's talk about it.
Yeah, this is something, folks. When you're, I love in England how you get relegated and you go down, and just as much you go up. And they're kicking penalty kicks at Wembley here in a weekend, and John saying, "Shut up and watch this." And one of the announcers goes, "This penalty kick's for $170 million." I'm
serious
like, whoa.
money, serious TV money. Serious money for getting promoted from the Championship to the Premier League. And what we're looking at, Tom, is Luton Town, and congratulations first of all to them, utterly unprepared to host Premier League football with a stadium that seats about 10,000 and an entrance to the Oak Stand that looks like walking into somebody's house.
So translate this for mere mortals in America like me. The Hatters of Luton Town are going to have Liverpool show up.
Liverpool. Mo Salah is going to walk through there.
On radio, it's a simple brick building with a blue stand and a bicycle in front. I mean, this is more basic than Richmond, where
how
Ted
cool is this,
coaching.
though? I mean, come on, how cool is this?
This is so much better than America.
This is so cool.
I mean, I'm sorry. I really love it. And one more comment on this before we get to our football expert, Lee Farage. But the basic idea, John, is all the people that went up last year, is it 3, right?
They all stayed up.
They all stayed up.
They all stayed
and that's
up.
rare.
Southampton, Leeds, and then Tom Leicester, which is just shocking considering they won the league back in 2016.
I
all
love
relegated to the Championship.
Baseball would be so much better for this. There's just no question about it. We need to speak to someone expert on this, also on macro strategy of North America at State Street. Lee Farage joins us this morning. Lee, are you going to go to see Luton, whatever it is, the Hatters when Liverpool stops by?
I would love to, yeah. It'd be fantastic to go and watch a Premier League game at Kenilworth Road. Whether I'll be able to get a ticket, I'm not sure, because, as Jonathan said, there's not many tickets available, so I think it'd be pretty tough to get one of those.
We're going to see the ticket with inflation. Let's just go to this, because I think it's something, John, and you are living with your families and all. The inflation in the United Kingdom is of an absolutely different character. We're talking about sticky inflation in America. How sticky is 9% food inflation in the United Kingdom?
Well, I think the food inflation is actually higher than that, Tom. It's 19% food inflation. Overall inflation is coming down, but still in the 8s. It's remarkable given how the consumer in the UK is struggling, how real incomes are falling, how mortgage rates have gone through the roof, which is very different from what we're seeing here. New mortgages here are higher, but not existing because we're all 30-year fixed. In the UK, people's existing mortgage payments in some cases have trebled. And yet inflation is proving remarkably sticky, and this is such a difficult position for the Bank of England. And it was interesting last week, we got the very strong inflation. We're pricing 4 hikes by the Bank of England, but sterling didn't go up. Sterling went down last week on the back of that because now the market is focused on, okay, you're going to have to hike a number of times to cure inflation, but what is that going to do to the economy over the sort of, the medium term? And the answer is it's not going to be pretty.
It felt a bit like September, a replay of some of that, Lee. What's been amazing just sitting here, Lee, over the last couple of weeks, speaking to people like you, people we admire in the market, is just feeling the tide start to turn. All this enthusiasm for the rest of the world, for Europe, breaking down with a couple of data points out of China, a reality check in the Eurozone, if you will, with Germany potentially heading into a recession. And Lee, at the same time, you've got this monster outperformance on the market cap weighted S&P 500, on the NASDAQ, relative to the equal weight, relative to what's developing in China, overseas and elsewhere. And Lee, I'm just wondering, and Tom and I have been talking about this going into the weekend and coming out of it, whether we face another period of US equity market exceptionalism because of this AI theme.
Well, I think because of the AI and also because of the relative strength of the economy. And, I've been on here and I've talked about this before. The US is in a very different place from the rest of the world. And 91% of mortgages being 30-year fixed will do that. The consumer here is just not hurting. We have a very strong labor market. We still have excess savings from the pandemic. Yes, it's limited to those of higher income, but they're spending it. And at the same time, we have this fixed rate economy, whereas you look at the rest of the world, RBNZ stopped hiking last week, worried about the consumer because mortgage rates have gone up. Bank of Canada have stopped, RBA have stopped, Bank of England have got to carry on, despite the fact it's probably going to mean a deep recession in 2024. The US is in a very different place. So you've got the AI element, you've also got the underlying economy, which is in a very different place from the rest of the world because of the structure of our lending market.
So Lee, this is peculiar for you, almost original. You sound almost constructive, the US equity market, is that right?
It's a relative story, Jonathan. I'm not sure I'm constructive on the equity market, absolute terms, but relative, you've got to look at the US and say, look, the US economy is in a very different place from the rest of the world. The Fed, we're still pricing the Fed cutting before anyone else, and that bit I don't understand. We've taken out a lot of the cuts, rightly so. We still have a cut by January, and yet no one else has a cut in that early. Why have we got an earlier cut in the US when the economy is holding up so much better than elsewhere, and the inflation is still sticky? We saw the PCE on Friday. Why are we going to be cutting before everywhere else that's actually, flirting with recession, in recession, on the edge of recession? We're nowhere near it yet.
So Lee, just listening to you, they're the kind of views that I'd be wanting to push through the FX market, develop a little bit more dollar strength. We've seen some of that. Lee, as you look at that differential potentially closing, how would you play that theme?
I think you play it through the dollar. I've been bullish on the dollar for a little while. It's rallied back well. We got over 140 on dollar yen. That's probably coming to the end of the story. But I think when you look at euro dollar, you look at cable, you look at the dollar against the commodity currencies, I think this has got further to go. I think, look, eventually the dollar's going to be a great sell. It's overvalued, it's overowned, etc. But what we're seeing is institutional investors are now buying dollars again. The first time we've seen that since March. They've been strong dollar sellers. They flipped around. They're buying it again. They're looking at this U.S. exceptionalism story again. So I think that momentum and this relative rate pricing can carry the dollar through. Probably during Q3, we're going to see more dollar gains. We're up around 3% from the lows in the DXY. I think there's another 3 to 5% to go on that story.
Oh, give me some levels then. We've got dollar index right now just short of 104, cable at 124, euro dollar a break at 107 earlier, 107.43. What do I need to look out for on the single currency, Lee?
I think we're going to see 105 before we see 110 in euro dollar. We're going to go below 105 before we see 110 again. Sterling, I think we're going to see below 120 before we see 125. And I think sterling we're going to get back down towards 115 over the course of the second half of the year.
Wow.
But I think certainly right now, yeah, I'm looking at the emphasis now. We've seen the sort of dollar yen move. I think the emphasis now is going to switch to dollar against Europe.
I just think this is too important. I mean, you two are seriously knowledgeable about this. The new coach at Chelsea? Are you kidding me? I thought
You want to talk? You want to go from a 1:15 call on cable to Pochettino over at Chelsea?
Just think how about Pochettino's getting paid and Sterling gets to convert. It's going to be great. I mean, but the bottom line is the guy's supposed to go to the Tots and he went to Chelsea. What's that about?
You'll have to ask the man himself over at Spurs.
You know, I just
see what Dan Levy's up to. I've got no idea.
Get on a plane, John. Get over there and figure out
I've got no idea.
Is going on.
No
Lee
idea.
Farage. I mean, just
Lee making some monster calls there, TK.
115 is a huge call.
124
That's edge of
right
Brexit.
now.
You know, I mean, I'd like. We got to get Lee back on here soon. I want to talk to him about Brexit.
Lee Farage at Stay Street. You want to talk about Brexit? Why?
Yeah, I think everybody's underplaying it. Is Brexit a success or a failure? And, you know, I'm looking at the stickiness of inflation in the United Kingdom. That's killing people over there.
Going back to 2016, when Leicester won the league, 7 years later, relegated.
Yeah.
Just shocking.
My friend John just said, you know, he just said they're destined, and, you know, there it is.
It's sad. Greg Valliere of HF Investments joining us next on this debt deal in Washington, D.C. with one eye all morning on this. NVIDIA, session highs, 408 in the pre-market with a $1 trillion plus valuation.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. In exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. The Tesla chief already met with Foreign Minister King Yang and said the company is willing to keep expanding in the country. Sources tell Bloomberg Musk is also expected to meet with Premier Li Chung, as well as visit Tesla's Shanghai factory. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I'm definitely heartened that you saw both parties there on the program expressing confidence that they're going to be able to raise the debt ceiling. Now, the fiscal decisions, of course, are between Congress and the president, and however they sort it out is good by us. But if you did not do that, the consequences for the financial system and for the broader economy would be extremely negative.
Trying to get used to this. A new face, of course, at the Federal Reserve, Austin Goolsbee, well known to us all, good friend to this program over the years, Chicago Fed president, speaking on CBS over the weekend, and one individual on the FOMC, the Committee on the Federal Reserve, leaning towards a potential pause at the June meeting. Before we get to that June meeting, we still need to deal with the payrolls report on Friday, then the inflation report, CPI, the day before the Fed meets. Bear in mind the blackout period, the quiet period for Fed speak, starts this weekend. So this is the final stretch of Fed speak so far, Tom, over the next couple of days. I think a lot of people share that view.
I mean, we were doing less of it here because Bramwell's not here. I mean, Bramwell would have, pushed the
I'm always suspect, if the person who takes a day off calls in the day after a long weekend.
Yeah.
Always suspicious of that, Bramo. Always suspicious of that.
You wonder how it's going to go.
You extend the weekend,
Yeah.
Where have you been? What have you up to?
I had fun this weekend.
What did you do?
I had 3 sailors show up at my house here with the United States Navy in Fleet Week.
3 sailors came
3
round.
sailors. They were submariners.
Did you invite them, or they just turned up unannounced?
No, they were outside drunk, and we took him in. No, they were family members, wise guy.
I've got no
one
idea.
Was from Maine,
Who starts a conversation with 3 sailors turned up over the weekend?
They're in their fancy uniforms. 2 are on the Oregon, which is a new submarine.
Okay.
Costs $1 gajillion. Our family members on the Montpelier, which is an older submarine, and these guys are serving the nation. They go out, you don't know where they go, and they're underwater for months and months and months.
Were you polite? Did you thank them for their service, or were you rude to them like you often are?
I served them a case of Jenny Cream Ale, and they said thank you.
As you should, good.
As I should. And what Greg Vallier knows is this ties directly in to our sailors and our officers, is they are on aircraft carriers, submarines, and everything else in the military in this budget debate. Mr. Vallier is with AGF Investments. Greg, you absolutely nail it this morning by getting beyond the cable TV idiocy to the Senate's outrage over the defense of our nation. What are we going to see, not in 2 days, what are we going to see in 5 and 6 days from senators worried about the Pentagon?
Well, it's going to be a big deal. And Lindsey Graham, a famous hawk, blew a gasket on, I think it was Fox on Sunday, because the defense spending in this bill will be lower than the rate of inflation. So for a country that doesn't spend as much as people think we do out of our GDP on defense, this really angers a lot of Republicans.
It angers Republicans, but I'm going to suggest the Democrats are going to show up as well. I mean, is it this is critical, Greg, is it a bipartisan fury of our officers and sailors, our infantrymen at risk? Is it bipartisan in the anger here?
It is, but we can't default. I think people realize that a default would be even worse. And during the course of this year, Tom, I think there'll be supplemental funding for the Pentagon. There's ways you can still get money from the government, and I think that you will see more spending during the year. But there's a lot of complaints right now. Just to bring it to tonight, there is a big vote tonight in the House Rules Committee. I think that Kevin McCarthy will prevail. But I think this thing drags on because of Lindsey Graham and others into next week. And it probably gets right up until June 5th.
Well, Greg, that's what I was going to ask. Do we have a week?
Well, that's a good question. Here's what I would say. If we hit the deadline, the Treasury can sell bonds out of the Highway Trust Fund. Treasury can sell bonds out of the Social Security Trust Fund and pay them back a week or 2 later. So I think it's highly unlikely that we would see a default. And I would add, if there actually looked like there would be a default, I think the markets would get so jittery, it would finally send a message to Washington.
Greg, we ask ridiculous questions in politics sometimes, like who wins, who wins, who won after the weekend. Who do you think is doing a better job of just presenting what they got out of negotiations? Is it the president or is it Speaker McCarthy?
Well, I think the president's always been underestimated as a negotiator, and I think he did a pretty good job. The surprise to me, though, is Kevin McCarthy. I think he was held in low regard until a few months ago. He became House Speaker. He got something done. They didn't get all that they wanted. In fact, in this final deal, a lot of what they wanted got whittled down, especially on the total spending cuts. But no, I give both of them credit. But I think Kevin McCarthy is now a serious player.
Greg, the senator from West Virginia got a pipeline moving south from Harris. I believe it's Harris, West Virginia, on south across the border. Maybe it's Harris where it goes across the border to Pennsylvania, just southwest of Appomattox. Can you give out pipelines? There it is, from Bradshaw, West Virginia to Pennsylvania, Virginia. Okay, there's a pipeline for Joe Manchin. Can you give conservative Republicans a pipeline?
You can give people anything. And this was audacious. That's typical of Joe Manchin. He gets what he wants because he's still whispering that he may run for president. So everybody has to placate him.
Well, what about the 10, the 12, the 14 people blocking Speaker McCarthy's efforts? Can he give them a bone that's highway-like or pipeline-like?
Sure. I'm sure there are people who are going to have post offices named after them. There's lots of deals that are being cut right now to get this one holdout to vote for them later in the day.
Hey, Greg, what do you make of what the Republican candidates for the presidency have got to say about the deal that was struck?
Well, DeSantis was really strident and said, it was a terrible deal and we're still headed toward, financial ruin. It was a pretty strong statement. DeSantis now is in a position where he's got to throw bombs because he's so far behind that I'm not sure he can catch up.
Greg, just a final word on defense spend in America. Yep. And not for me to say what that level should be, by the way. Greg, can you just go through the numbers for us and really paint a picture of how much a percentage of overall spending defense spend actually is, and get to the heart of the issue, that if you do want to do something about the deficit in this country, don't they have to rethink what's happening with defense?
Well, I would say no, because we're not spending enough on defense. As a percentage of GDP, we're spending less than 3%. We complain all the time about Canada. They're not spending 3% of GDP. A lot of other countries aren't as well. And I think that, as the Wall Street Journal consistently points out, we're not spending enough on defense by any historical yardstick.
So, Greg, if that's the case, where does that leave any negotiations over ever cutting spending and doing something about the deficit?
Well, you got to talk about revenues at some point. I mean, at some point that we have to at least look at taxes. I'm not saying we need a big, huge one, but fearless forecast, guys, the next big fiscal story is the expiration of the Donald Trump tax cuts in a couple of years. That will make this fight we just went through look like a picnic.
Greg Valliere, looking forward to that, of AGF Investments. TK, you can see where this is going, can't you?
Peter Coy,
some of that.
Peter Coy, wonderful at the New York Times. He absolutely nailed that in his essay on Monday, after this deal. He said, look, we're all talking about spending. When do we start talking about revenues? You just heard that from Mr. Valliere.
And you saw that in these negotiations, that was just a non-starter, a red line.
Yes.
For Speaker McCarthy.
Yeah, it was. And you know what? I just hope everybody in Washington got their trades in on the NASDAQ this weekend. I mean, I guess, are they still allowed to trade?
NVIDIA, 407. NVIDIA, 407.
I mean, this is, and I just did a quick scan of industrials. The Dow's not there. The Dow's actually flat to red on the screen. This is a tech rally, a tech relief rally, even with SPX up 0.6%, NASDAQ up 1.5%.
It's a monster rally. To cover that monster rally, Aaron Kennan of Clear Harbor, Victoria Fernandez. She'll be joining us from Crossmark. Andrew Sliman of Morgan Stanley, right on cue. Looking forward, Tom, to catching up with Andrew in about 30 minutes time.
Now, we're going to listen to that because you got to reframe here. If you're in the game, do you load it up? And critically, Andrew, we'll talk about people that have been comfortably in cash.
Comfortably in cash getting 5%.
Guy stopped me. I was mowing the lawn in a park over the weekend. You know, the
on that Deere mower, yeah.
And on John Deere, and the guy came up. He says, "You got NVIDIA and the triple leveraged all cash?" I said, "No."
Nope. Does 5% cash start looking like trash with moves like that?
to gross out
Get sucked in,
13.2%.
sucked away, and then get slapped around. Classic equity market stuff.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg surveillance 4-day work week is Tuesday, not Monday. Feels like a Monday, but it is not. We've been looking at the festivities in Washington and certainly the festivities with a continuing advance in NVIDIA. And you see it with the NASDAQ up a solid 1.4% off Friday's good move. SPX up 24 points as well, up 0.6% right now. The VIX 17.14. It'll be interesting to see how that folds out. Right now, we're going to go to the economic data, except there isn't any. Michael McKee joins us here as we stagger into the week. I mean, we've got jobs day on Friday, but first we got to look at housing data. The first thing I looked at this morning was a bank rate 30-year mortgage. Does the Fed care that we're at 7.17%? The moving average of the 30-year mortgage is right back up where it was before?
I don't think they're looking at the specific number, but they are interested in slowing down the economy. So the slowdown in housing is a good thing, but the problem for the Fed, of course, course, is that with nothing for sale at this point, because nobody wants to trade in their low rate mortgage, then prices go up on housing, and we had seen and hoped for a dip in the housing component in the inflation numbers, but this may wipe some of it out down the road. A lot of what people are talking about today, though, is what's going to happen to the economy from this debt deal. We're waiting for the CBO score.
It's exactly what I'm waiting for.
But I have been reading through all of the research from the various Wall Street shops, and basically the consensus is you won't even notice it. It'll be like 0.1% or 0.2% a year from now. That's going to be the problem. And this is all against the CBO baseline. It's not like an actual, here's what we're spending and we're going to cut it by this much. It's what they thought would happen prior to this deal. So it's not a really big deal overall in terms of the economy, with the one exception of the law codifies the idea that the suspension of student debt payments ends at the end of August. And those people probably have a higher marginal propensity to consume. And so the money that they were saving and spending, they won't be spending. And that could have an impact. Mike Feroli from JP Morgan suggests that because it'll be concentrated in a short period of time, could be maybe about 25 basis points or something for a quarter if people stop spending on other goods.
There's a judicial ballet there as well within student loans that we'll have to see as well. You and I follow CBO with immense respect. When will they weigh in with a bipartisan analysis of what was wrought this weekend?
They're going to need to get it in the next 24 to 48 hours because they need to have it before the votes in Congress. And so I would expect something fairly quick. And, you know, if the guy sitting around the computer at one of the Wall Street banks can come up with a model, they can come up with a model as well.
Are you modeling, you know, you're not in the economic game like Steve Stanley is, but are you modeling a 200,000 statistic for non-farm payrolls on Friday, early report?
You know, it seems possible because we've been surprised by jobs to the upside throughout this whole process. People keep pushing in the Bloomberg survey for lower numbers, and it doesn't happen. Interestingly enough, Mark Zandi from Moody's suggests that the budget deal could mean we have 120,000 fewer jobs created over the next year, which again is something that you're barely not really going to see in the data all that much. But the number of jobs created has to come down, or the Fed's not getting what it wants.
Michael McKee with us, of course, doing all of our economic coverage, and in a time here where we're really resetting into June, the final month of the first half of the year, what a wonderful time to catch up with Stephen Stanley, Chief U.S. Economist, Santander, the U.S. Capital Markets Operation. I have to go to the housing data this morning, and that finally, with Carl Case and Robert Schiller's wonderful index, we're back to negative statistics year over year. Mike just mentioned that the housing economy is completely messed up with locked mortgages and all that. Can you predict the housing economy now, or do you just give up?
Well, I think there are a couple of things that we could start with. We know in the long term that the market has been undersupplied for a long time, and that was exacerbated for a time during the pandemic. I think, you know, we've had a sharp cyclical drop in demand as mortgage rates rose. But I think once things normalize, we're going to get back to a period where the supply is tight. So I think that, you know, there's a strong underlying bid for housing. I think the other thing is, as Mike suggested, because there's a lot less existing home supply on the market, the share of new home sales as a percentage of total home sales has increased. And that's actually a good thing, because what we're working through right now is an excess of new home inventories. Builders had gotten basically had kind of gotten out over their skis a bit when demand pulled back, and now they're trying to work down inventories, and they've been able to do so faster because there's less competition from the existing
You are acclaimed for microanalysis. What do you learn from rent studies as you look at home ownership and for what it means for the whole economy?
Yeah. So, I mean, I think we kind of go back and forth on this from periods where the overarching goal is for everybody to own a house. We've certainly, you know, have gotten ourselves into a little bit of trouble getting to enthusiastic about that. I think mortgage rates at these levels obviously change the equation quite a bit. But I will say, you know, Mike before brought up the whole shelter cost piece of the CPI. And my big take there is that the movements there tend to be much more gradual than I think people are kind of braced for. I feel like there's this sense of, well, as soon as we peak and start to turn down, we're going to be 3-4 months and we're going to be in negative territory on this. And if you look at the data for the housing boom and bust 15 years ago, it took about 2.5 years to go from peak to trough on the shelter cost piece of the CPI, and the trough was basically flat. And that was a point in time when home prices were falling 20% a year.
We got coming up here at 9 o'clock, Case-Shiller 20 cities, and the survey's a negative statistic.
Yeah,
negative growth.
As Steve said, that takes a very long time to get into the CPI data. However, Steve, one thing that economists are pretty good at is forecasting CPI. And given that, at this point, is it really going to be as big a deal on June 13th, the day before the Fed decision, in terms of them making a decision, or do they have a pretty good handle on it? And if so, what does that tell you about what you think they might do?
Well, I guess for CPI, a 10th surprise is kind of a big deal, right? So if you get a 10th higher than people expect, particularly, you know, I haven't done my forecast yet. I don't know what the consensus is going to be, but let's assume the consensus is probably going to be 0.3 core, because that's usually what the consensus is. If the number comes out at 0.4 or even 0.5, I think it starts to raise some eyebrows. I think what you're seeing from Fed officials, or what you're hearing from Fed officials, is very much in line with what the data are showing, which is they're starting to get a little frustrated that they're not making any progress at all. I mean, you look at, so core CPI has been 0.4 or higher for 5 straight months. So, you know, to your point about employment, the same thing on prices. Hope springs eternal. Economists keep forecasting 0.3 core, and we never seem to get it. And I think their feeling is that we're not seeing improvement in that piece that they've highlighted, that core services ex housing number, and until we see some sustained improvement there, I think they're going to be on edge.
I want to change the subject back to the debt deal for a second, because you really follow the Treasury market very closely. And there is a theory now that Treasury, having spent everything they have in the bank almost, is going to rebuild their account very quickly. The latest borrowing needs said they hope to be at $500 billion by the end of June. Right. If they do that, is it going to cause a massive liquidity drain like some people are predicting?
There's definitely going to be a huge ramp up in Treasury bill issuance. I would say it's not going to be as big a deal as it could be, because there's still a tremendous amount of excess liquidity sloshing around in the system. The Fed has done a little bit of QT, but there's still, you know, trillions of excess reserves in the system, excess liquidity, I should say, in the system. And so I think that will help to absorb the bill supply. But yes, we're going to get bill supply coming hot and heavy over the next month or so.
Away from the pandemic, is there an analog to where we are right now? I mean, we have these historic moments, 94, obviously 01, the NASDAQ bubble and all that. But in your mind, Stephen Stanley, all you've done, Royal Bank of Scotland years ago and the rest, is there an analog to where we are right now, exiting the pandemic?
Well, I think it's the economy's in a bit of a weird spot, right? Because you're a year, 2 years out of a recession, and most of the business cycles in the last 30 years have been quite long, and yet the Fed has had to ramp up rates very quickly. And you know, the consensus has been for over a year now, it seems, that the economy's 3 months away from a recession, right? So I think there's a presumption that that this cycle is going to be very short, and we'll see whether that plays out, because you don't really have the cyclical or the imbalances, the structural imbalances in the economy that develop over a long cycle. But what you do have, which we haven't had in a very long time, is tight monetary policy.
Mike's got a question for you. He wants to know what you're going to ask June 14th at the press conference. Could you imagine Stephen Stanley at the press conference? They just ignore him.
That's an interesting idea. We could ask Steve, what is it that you want to know from the Fed that you don't know, given how much all of them talk?
Well, I think that, you know, there's all this question about pause versus skip, and I think the issue in my mind is what exactly are they hoping to see? And we have the quarterly forecasts. So, I mean, I guess we can use that as a baseline. But, you know, as I said before, I think in my mind, what I see when I see those forecasts and then I see what's really happening, they're expecting a much bigger backup in the unemployment rate. We've got none of that. They're expecting inflation to come down pretty rapidly. We're not seeing that, at least in the core numbers.
We're running out of time here. When do non-farm payrolls break?
I think it's going to be a while. I think there's still pent-up demand in the labor market in certain sectors.
It's just... Stephen, thank you. Stephen Stanley with the Santander. That's so important what he says there. He's won every award out there, folks. And for him to say, you know, Michael, the gloom, and you know this way better than me, we got people looking to come down to under 100,000. We've even got people that have boldly said we're going to see negative non-farm payroll statistic.
Yeah, I mean,
I'd say Mr. Stanley's pushing against that.
If you want to get to the Fed's unemployment rate at the end of the year right now, you need many months of negative employment statistics, but they're going to change their forecast.
Yeah, the importance here is, I'm sorry, June 1 is coming up. June 2, Jobs Day, with all the work of Michael McKee. That's on the edge of getting towards the end of the year. Futures, I'm going to call it a daily high up 25. Up 0.6%. NASDAQ up 1.4%. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars for weapons from its U.S. and European allies for that military assault. The European Union has stripped out explicit references to China as a non-market economy in its joint trade strategy with the U.S. Bloomberg has learned EU nations agreed to a watered-down text of joint conclusions from a meeting of EU-U.S. Trade and Technology Council in Sweden that begins today. The newest version obtained by Bloomberg also softens earlier language on approaches for screening outbound investments. NVIDIA is set to become the first chip maker to achieve a $1 trillion market capitalization. The company's blowout revenue forecasts underline the enormous growth potential from artificial intelligence. NVIDIA is poised to be one of 5 U.S. companies with such a capitalization, joining Alphabet, Amazon, Apple, and Microsoft. Only 9 companies globally have ever achieved this level. And Canary Wharf has become the latest symbol of the global real estate downturn. Moody's has downgraded the debt of the landlord and predicted a challenging funding environment for at least the next year. Now, the East London Financial District, home to the skyscrapers of HSBC and Barclays, says it may need to rely on asset sales to repay borrowing or inject fresh capital into the business. Canary Wharf has more than $1.7 billion of debt coming due in 2024 and 2025. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
If inflation stays sticky, or it comes down because we enter a non-trivial recession, it's equities that I think are a scary place. They're not priced very consistently with bonds, and we're going to find out who's right in the next year.
Cliff Asness of AQR speaking with David Rubenstein. Mr. Rubenstein, you can watch the full conversation with Mr. Asness, Dr. Asness, Bloomberg Wealth, with David Rubenstein tonight, 9 p.m. in New York. I really can't say enough about this, folks. Cliff is one of the recent graduates, I should say early graduates, of a huge double-degree program at University of Pennsylvania in computer science, and then on to Chicago, one of the sharpest guys out there, whether you agree or disagree with him. Serious, serious conversation for Global Wall Street. That's what we like to do with Damian Sassower. Always interesting, but ever more so where the idiosyncratic is not becoming idiosyncratic. You can say suddenly things change in the emerging markets. He's chief emerging markets credit strategist for Bloomberg. I don't even know where to begin. There's so many stories to go with. Let's start with Turkey. Okay. With an election, we print through 20, it's like Dow 10,000, 20 lira per dollar. It's convex log. There's a momentum to it. What does Erdogan and Semsek, if he is selected, do, the ex-Merrill Lynch dynamo out of Istanbul? What does Erdogan, Mehmet Semsek, do to staunch the move?
Well, it's amazing. Semsek was once the deputy PM under Erdogan in 2018, but then he was replaced by Erdogan's son-in-law, Albayrak. So, yeah, no, it's nice to see him back. It's nice to see some continuity returning, hopefully, to the Central Bank of Turkey. But I think, look, I mean, if you listen to people like Morgan Stanley, they're calling for dollar lira at 28 by the end of the year. You look at the market itself, it's pricing in something on the order of 25. So there's more pain ahead for the lira. But I mean, I can remember the days not too long ago, Tom, when we were talking about 6-handle, 7-handle in lira. You're absolutely right.
But
we're
this
over a
is
20
not
handle
a banana
now.
republic. It's not, you know, I don't mean to make a joke here, but this is not a Steve Hanke down at Johns Hopkins country. This is Turkey, a NATO nation. How does the politics fold into the pricing and sweat of your EM debt price down, yield up?
Well, certainly, I mean, investors aren't really invested in Turkey anymore. I mean, it's down 85% over the last decade, so there's not really any positioning there to speak of. I think what's interesting, though, I mean, you have to think about the earthquake. You have to think about the fact that net FX reserves are now negative. They've actually formally, officially announced that they have no FX reserves left to protect the currency, and yet they have such control over it. I mean, let's be real. I mean, Erdogan and basically the policymakers there have complete control of the lira. People can't move their money into and out of Turkey with any regularity whatsoever, so it's not a speculator's market anymore. So I think what you have to do is you have to look at what might come next. Yes, you might see rate hikes coming back into the fray, but is it really going to be enough to protect the economy and defend the currency? Probably not.
I just don't think they can put up walls around it like they did in Constantinople years ago. I'm going to go to the blue dollar. I got a great chart from our people in Buenos Aires of the black market in Argentina. And I know it's a discrete story. The IMF has given them a ton of money. They failed. The blue dollar peso, the peso's at 238, folks, per dollar. And the black market peso is at 499 to print 500 today, I presume.
The real story in Argentina right now is China. Is the fact that
the swap market
is because they haven't renegotiated the $44 billion IMF line.
Right.
They are now turning to China. I'm talking Buenos Aires. The Fernandez administration is turning to China to increase that swap line because they can't pay their employees. They can't pay their people.
What is the collateral they will? What are the promises, visible or less visible, that they will make to Beijing?
Well, it's going to be commodities, right? It's going to be their agricultural exports, hopefully, because that's really what the economy is kind of premised on. But with the drought and all the things that are going on fundamentally there, I don't even think Beijing is going to agree to it. And I think that really takes us full circle here. I mean, going into this year, and really for the better part of the first 4 months of this year, it was about China's emergence from COVID and the recovery. And now that is pretty much off the table. And what you're seeing in China is dollar yuan at 7.08. You're seeing China yields at near historical lows, or at least certainly 5 or 6 year lows.
The equity markets.
And that's telling you everything you need to know about growth globally. I mean, the fact that it is underperforming. But what's really interesting, look at the pro-cyclical equity indices Japan, South Korea, the Kospi, they're up huge. Look at obviously the NDX, the NASDAQ is up huge. So they're telling you a different story here. And I wonder, we always hear you guys talk about it's just a few, it's just the NVIDIAs of the world that are moving the NASDAQ. Right. It's the same thing in South Korea. It's Samsung that's moving the market, pretty much 90% of all inflows.
So let's dovetail this, folks, and this is really important. At the IMF, the bombshell was a 5-year view of global slowdown. Whether you believe in that or not, it's a prediction we'll see out there. And the solution globally is to go to quality. Yeah. Where's quality EM?
Well, we're going to have some more confidence this week after we hear the minutes out of Mexico, because if you just look at currencies, which are the most liquid way to play emerging markets, it's the currency market. So on one hand, you've got Mexico, Hungary, Colombia, the high yielders that are up near double digits this year. And on the other hand, you have South Africa, which is down 13, 14% this year. And it's also considered a pro-cyclical economy, but what it is it's a manufacturing driven, it's a commodity exporter. I'm talking South Africa here. So in a services-led kind of rebound, which is what we're seeing globally.
A tech-led rebound,
if you will. It's going to be, the pro-cyclical Kospi, the Nikkei. It's not going to be South Africa that leads the way, and that's kind of what we're seeing in the currency markets.
And this is my life, folks. Qantas is in my ear saying, ask him about NVIDIA. Damien Sassar, only I can do this. Tell me about Taiwan dollar off of NVIDIA. I mean, that's what the stuff's made. Give us Qantas wants a Taiwan dollar view. Off of NVIDIA.
So when we've said this, I've said this till I'm blue in the face, the Taiwan dollar is that Taiwan's kind of flat to up slightly on the year. It's actually held in pretty well. And again, it's probably in large part due to Taiwan Semiconductor and the fact that you're still seeing equity inflows into Taiwan, which is supporting the currency on the whole. But I think, look, if we do see a flight to quality move, it's going to be an unwind of these carry trades, and the Taiwan dollar is going to be a leader there. The Japanese yen is going to be a leader there. These are the funding currencies that people have made their mint in emerging markets on for the past 6 months, Tom. So all that goes away.
I can do this on the Bloomberg Professional Service, folks. I can take Taiwan dollar 32 down to 30, and you're suggesting it reverts back to strong Taiwan dollar, back to 28.
You're looking at the other way, right? It's dollar Taiwan. So a higher, down to 30 would be a stronger Taiwan, right? It would be a stronger Taiwan dollar in a risk-off scenario.
So what does Japan do? I mean, Japan's not EM, but maybe they got a monetary
140
policy.
And change. They would probably come down too, right? I mean, again, these are funding currencies, and if we do see this kind of washout and the carry trades get unwound, those are the two currencies that are definitely gonna outperform. But their equity markets already are doing that.
Right.
So it's really quite unbelievable if you just look at it from an investor standpoint. I mean, the market's telling you two different things.
I got to finish up with renminbi. I look at CNY. I know some people look at CNH, the offshore as well. But the fact is, it's not that it's backed up weaker yuan, it's the way it's done it. Is it managed?
Oh, yes, it is. But I think what's going to be interesting here and what the markets are most afraid of is that Beijing is allowing it to depreciate now because it wants to wash out all the speculative shorts. And once, I think the fear is that, look, they're going to let it go 708. They might even let it go 710, 715. I mean, that wouldn't be foreseeable. But at that point, basically, there's a lot of demand for yuan, from, the dollar exporters in China. But I think what's going to be interesting is, let's just see if the speculators really get washed out on this move. I think that's what Beijing is trying to orchestrate.
That much. They can orchestrate.
It trades within a range. It's been a very stable currency. I mean, from a carry to vol perspective, the China yuan is still a pretty, it's a pretty good performer.
What's your single best EM opportunity this morning as you write for Bloomberg Intelligence?
Well, I think we got to look at the minutes in Mexico. I actually still like the Chilean peso because we saw central bank minutes out of Chile yesterday. They came in pretty hawkish, much more hawkish than the market anticipated. So the Chilean peso is one of the few currencies that are up today. I kind of like it. I think you can probably still clip some pretty good yields there. I don't think the easing cycle is going to begin by Q3, which is what the market's pricing in. Yeah, I like the Chilean peso.
See, this is the difference, folks. I'm watching Padres go down in flames to the dreaded New York Yankees, and Damien Sassauer is reading Chilean minutes of what we'll see. Damien Sassauer, thank you so much for Bloomberg Intelligence. Of course, some really important work there. It is an extraordinary time. I think John did a great job this morning of really featuring NVIDIA. I'm like, well, okay, it's $1 trillion company, 26,000 employees versus, say, 270,000 employees for other $1 trillion companies. Is an extraordinary story. We're going to drive this conversation forward, of course, with the leadership of Bloomberg Technology. Look for that through the day. And frankly, we'll go into the Asia morning. Coming up tonight at 11:30 p.m., East Coast time, a follow-on interview from what we did a couple weeks ago, but it's important. This is with our Stephen Engel, our strongest in Asia. Steve Engel with Jamie Dimon. Look for that tonight from Shanghai. You can see that at 11 p.m. New York time. I'll let you figure out the time zones. Damien knows the time zones. I don't really know the time zones. Tonight, Jamie Dimon. This is Bloomberg. Good morning.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
In a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if you've, we can put our camera feed together and tell that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades? I guess?
I will tell you, it started at razor blades because that's such a high ticket item, but, it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Let's get your week started. Live from New York City this morning. Good morning, good morning. This equity market, this NASDAQ, better than good. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Live from New York, coming up, Biden and McCarthy working to push through their deal. As Nvidia surges towards a $1 trillion market cap, investors begin to consider one more hike in June. We begin with the big issue. We have a deal.
It takes the threat of catastrophic default off the table, protects our hard-earned and historic economic recovery, and the agreement also represents a compromise, which means no one got everything they want. But that's the responsibility of governing. I strongly urge both chambers to pass that agreement.
We know at any time when you sit and negotiate within two parties that you got to work with both sides of the aisle. So it's not 100% what everybody wants, but when you look, the country is going to be stronger.
And now for the hard part, gearing up for a lobbying campaign on Capitol Hill.
Just because the swamp is flawed doesn't mean the average hardworking American should take it on the chin. Why should they accept that? Sweep the COVID money, sweep the IRS money that was, to expand the IRS to go after the American people.
I haven't seen the text. You know I'm not a big fan of in principle or frameworks. We're all trying to wade through spend right now. At the end of the day, though, the American people have to understand that we are at the brink of default. We don't have a deal yet.
So as expected, some Republicans aren't happy, some Democrats aren't happy. And even though time is short and the Treasury cash balance is below $40 billion, the president is still feeling good.
I never say I'm confident what the Congress is going to do, but I feel very good about it. I've spoken to a number of the members. I spoke to McConnell. I spoke to a whole bunch of people, and it feels good.
If that good feeling is warranted, if this deal passes, it would suspend the debt ceiling until 2025 and cap federal spending for the next 2 years. Goldman Sachs calling it a major reduction in uncertainty, a minor reduction in spending. They say the spending deal looks likely to reduce spending by 0.1 to 0.2% of GDP year on year in 2024 and 2025. Let's get to the Bloomberg team. AMH down in Washington, D.C. alongside Katie Lyons. Anne-Marie, how difficult is the next few days going to be?
Yeah, John, it's going to be difficult. Landing the deal is one thing, and they were able to do that over the weekend between the president and McCarthy really being the final negotiators at the table. And then, of course, getting it through the House and the Senate is a completely different story because both these men are dealing with the far right and the far left of their parties. Today, there'll be one crucial step forward and a test, really. It has to first go to the Rules Committee. There are 3 hard right conservatives that are very critical of McCarthy on this committee. So today, we'll even know whether or not this bill will make it on the floor. But if it does, it would set up a vote for tomorrow. And if we have a vote tomorrow, with both camps really calling the centrists within their party, making sure they can get this over the finish line, we would likely see that happen. Then it goes to the Senate. And the Senate, even though you have the president saying he's spoken to Mitch McConnell and he feels like he can get the votes, what you could have is a very long, drawn-out, cumbersome process because already you have senators like Mike Lee of Utah who say it doesn't go deep enough in the spending cuts, and then others like Lindsey Graham who want to see amendments for higher defense spending because they don't think 3% is enough when you start to factor in inflation. So while there is a path to get this done by June 5th, there could potentially be some drama.
Kayleigh, is time against us?
Well, the clock certainly isn't in anyone's favor here because we're now less than a week out from June 5th, which, as Anne-Marie was just alluding to, does provide some challenges because there isn't much room for error, and yet there is room for error in Congress. And we have to keep in mind as well that it isn't ultimately just about getting to June 5th. It's whether the ratings agencies decide that we're too close to the brink because, of course, we had Fitch putting the U.S.'s credit rating on negative watch last week. We all know what happened in 2011 where we hadn't even hit the X date yet and the U.S. was downgraded. So certainly there are risks here. We also have to consider the risk for the market of the deal actually making it through Congress, passing, the president putting the signature on it, raising the debt ceiling in time. What that means, though, John, is that the Treasury is then free to borrow and will need to borrow a ton in order to rebuild its coffers. We're talking estimates of $1 trillion in issuance by the end of the third quarter, and that could really create a liquidity drain for this market and ultimately weigh on risk assets, even if there is a deal in the first place.
Let's have that conversation right now. Katie Lyons, Anne-Marie, to the two of you down in Washington. Fantastic work through the weekend covering this deal as it came through. Joining us now is Crossmark's Victoria Fernandez, Morgan Stanley's Andrew Sliman. Let's pick up on that point from Katie, Victoria. Let's pick up on that point. Maybe up to $1 trillion of T-bill issuance coming up over the next couple of quarters. I don't know what the number's going to be. Is that something I should worry about?
Well, Jonathan, I think it depends on how that's going to be funded, right? We say 1.1 trillion are the numbers that I'm seeing by the end of the third quarter when we start to do the budget deal. If we get the money coming out of the reverse repos, then it's just kind of a shift on the balance sheet and it's not going to be affecting liquidity. And I think that's the key thing we need to be watching here is what's going to happen to the liquidity in the market, because that's been the base that's been supporting the market for the last 6-9 months. If we see money coming out of reserves, then that's a little bit of a different story, and I think we have to be concerned as to what happens there. So I think we have to dig down a little bit deeper than just the amount that's being issued, and also realize what that's going to do to debt coverage, because we're issuing at much higher rates than what we've done before, and it's a tremendous amount. So I think there's a lot of issues to deal with. We look at 2011, everyone likes to compare it to then. Once we got the deal, there was actually more austerity in that deal than what people anticipated, so the market pulled back. I don't think we're going to get that same reaction this time based on what we're seeing in this deal. There doesn't seem to be as much austerity, but the liquidity component, I think, is key. That could drive some more volatility for this market.
Well, let's unpack those two issues and start with the growth story. Andrew, is any of this meaningful enough to be a drag on growth anytime soon?
Certainly, I think higher yields continue to stress the banks. And to the extent that, as Victoria said, there's more liquidity, there's more issuance coming, or higher rates, it only will further tighten financial conditions. So I think that's the point of stress in this system right now.
Let's pick up on that point. Victoria, you alluded to it. Are banks going to be competing with the T-bill issuance of the next couple of quarters, if indeed we assume this passes?
I'm not sure how they can avoid it. I mean, this story that we've had over the last 2 months or so has been about banks having to raise those rates. If we see all of this issuance come out, it's a very easy process for people to shift those funds into buying T-bills. I mean, we did it for our clients last week. We had clients calling us saying, hey, we're moving some cash over to you. We want short-term treasury bills to capture that 5% plus yield that we're seeing because we're not getting it at the bank. So it's already starting to happen. Does that continue? It could. So what does that mean for banks? Well, they've had a tough time since the banking crisis started back in March, but I think they can level that off a little bit, raise rates a little bit. Yes, it hurts their margins, but I think they're going to have no other choice but to do that.
If we can park this and refocus on the data, payrolls on Friday, June 13th CPI, June 14th the Fed decision. Victoria, I've got Andrew Honhorst over at Citi setting the bar pretty low. He says 200,000 new jobs out this week, another 0.4% month-on-month core CPI read. He says this Fed's going to hike in June. Are you on the same side as that?
I don't think I can disagree with them from where we sit right now. Look at Fed Fund futures. I mean, you've got a 67% probability that we're going to have a 25 basis point rate hike in June. Last week, that was at 20% chance. So it's been a huge shift because we're not seeing inflation come down at the rate that the Fed wants to see. Now, if you tell me JOLTS numbers comes down, if you tell me we get more people coming into the labor force and we're starting to see some cracks within the labor market, then perhaps the Fed says, all right, we're going to pause a little bit. But monthly CPI continues to hold strong. You look at the weekly economic indicators coming out of the New York Fed, they're holding steady. We're not seeing that decline like the Fed is wanting to see. So I don't think we rule out a 25 basis point hike in June, although I think the other thing that we might see is a skip, not a permanent pause, but a skip there, and then maybe reassess in July. I think those are going to be your two options.
At the start of the year, people were itching to buy T-bills, whatever. And if I promised you 5% for the rest of the year, a lot of people would have taken it. It looked good. Cash wasn't trash anymore. It gave you 5%. Then, Andrew, Meta happened. NVIDIA happened. The NASDAQ happened. Andrew, this great quote from you and our colleagues here at Bloomberg in the last week, and want to share it with our audience who might not have read it. If I were a financial advisor and it gets to October, November, and I haven't made money for my clients because I'm heavily in cash, I would start to get nervous. Andrew, do you think they're getting nervous right now?
No, I think it's too early for two reasons. Number one is it's too early. We still have to get through the summer. It's always a rocky time for equities. And the stock market's up single digits. So single digit stock market versus 5% or whatever risk-free, is not compelling enough. I think it's when you start to get returns where if the market breaks above a double-digit return and you're still sitting around waiting for that big pullback that so many strategists have predicted, that's when the nervousness sets in. I just think there's a high level of fear, and it's only a question of when does fear pivot to FOMO, and when you're seeing markets move higher. People are generating returns in stocks versus sitting in cash.
I can see that fear right now in NVIDIA, the fear of missing out.
Yeah.
Andrew,
Yeah,
that
absolutely.
name right now, 406. The line in the sand is 404.86. That's the $1 trillion market cap line in the sand. Victoria, how deep is the FOMO right now, looking at that name on the screen?
It's pretty deep, Jonathan. I mean, we had clients call us last week saying, do we need to switch and be more growth oriented in our large cap strategies where we have more of a core focus right now because of exactly that. They do have a fear that they're missing out on some of those elements, but we have to talk to people and go, look, we've got to look at balance sheets. We've got to look at valuations. We know there's this element here. We have exposure, but do you want to overweight to a stock that's trading 175 times forward earnings? It's a little scary to do that, I will admit, as a portfolio manager. So I think you have to balance that. You have to have some exposure for your clients there, but I also think you have to talk to them about valuations and what it means to have a more diversified portfolio and have some of those more defensive stocks, because quality is the factor that's leading overall right now with such narrow breadth in this market, and you can't ignore that.
What a run. We'll continue the coverage. That stock up by more than 4%. Victoria, Andrew, sticking with us. Equity futures going into the opening bell about 20 minutes away. Futures positive by 0.5% with some movers. Here's Abby.
You gave the number, John, and it is 404.86 on NVIDIA. Above that, and we are above that level right now in the pre-market, means $1 trillion achieved for a chip maker. The first time that this will happen, potentially, likely to happen, and that comes on that blowout quarter and the massive enthusiasm, the mania for AI. It's also helping out Palantir Technologies. Take a look at that stock soaring, up 7%, another AI play. And Kathy Woods is saying that Tesla is an AI play. Christian Bromhertz of Tribeca Trade Group told us this last week as well. That stock up 4%, and we've just even had a headline, John, that CrowdStrike is now announcing introing AI-powered security. If you have those two letters, your stock is higher.
Of course, why not? Just throw out AI and see if it sticks. Abby, thank you. Coming up, NVIDIA continuing to fuel the AI frenzy.
Every 2 years, we take giant leaps forward, and I'm expecting the next leap to be giant as well.
NVIDIA looking to become the world's first chip maker with a $1 trillion market cap. That conversation up next.
Many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from, and where is it gone? Because right now, it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David, but COVID, you know, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, you know, COVID's enough of a change that I ought to be able to do something new.
This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
Every 2 years, we take giant leaps forward, and I'm expecting the next leap to be giant as well. This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory.
It's the hottest stock in big tech. It is arguably the hottest stock in the world. NVIDIA, rallying ahead of the opening bell, poised to become the world's first chip maker with a $1 trillion market cap. This coming after unveiling a batch of new AI-related products in Taiwan. The company's CEO feeding the frenzy, saying all the right things, telling graduates during a commencement speech, quote, agile companies will take advantage of AI and boost their positions. Other companies will perish. Adding, quote, in every way, this is the rebirth of the computer industry. Alex Webb joins us now for more. Morning, Alex. Quite a speech from that man.
Absolutely, and it was really interesting, actually, when you look at the industries that he was willing to talk about. He was talking about the gaming industry, obviously very significant in its own right, but he also talked about this partnership with WPP, that's the world's biggest advertising agency, and the way that AI capabilities can be used to make personalized videos, huge, like loads of different iterations of videos for a given product. Now, don't forget, advertising is the business that underpins Google and Facebook, so the biggest tech companies of the past decade or so. It's sort of saying that we are going to be taking a chunk of this massive industry that has underpinned the last tech surge. He's making a very compelling case for the long tail that AI is going to provide NVIDIA. He's sort of trying to provide justification for this, very pricey stock price right now by showing the long tail that he sees.
Alex, it's funny you mentioned WPP, because some people are trying to work out how much of this is marketing and how much of this is real.
Look, I think that we are seeing a lot of people, as was Abigail was saying just before the break, a lot of people throwing AI into their public statements right now to try and bid up the share price. The thing is, we're seeing AI already. This isn't just stuff that we've seen with ChatGPT. AI has huge applications that aren't necessarily quite as consumer-facing. ChatGPT really brought it to the public's attention. Now everybody's sort of saying, well, hang on a sec, look, we're doing this already. We don't quite know the extent to which NVIDIA is going to be able to dominate that market. I don't think there's really a question that the market exists and that there will be a huge number of AI applications in the years ahead. The question is what chunk of it, the size of the chunk that NVIDIA is able to take. NVIDIA will have you think that basically they're going to be getting the lion's share. The reality might be a little bit more nuanced, and that's when the sort of pricing question starts to become a little bit harder to answer.
Alex, thank you, mate. We'll catch up with you around the opening bell, I'm sure. That stock right now, 406. The number, the line in the sand, 404.86. That's your $1 trillion market cap watch going into the opening bell. Victoria Fernandez, Andrew Sliman back with us. Victoria, I'll build on the question I asked Alex. How much of this is hyperbolic nonsense and how much of it is just an unavoidable trend that you need to get a part of and get a part of quickly?
I wish I knew the answer to that, Jonathan, but you think of like the word count. I don't know how many times AI was mentioned during the earnings season, but it was some astronomical amount, and everyone is latching onto it. And you have to kind of wonder, is it similar to what we saw in the EV space, right, where you had Tesla come out and they were the main driver, and they still are, but you started to see everyone else try to catch up to them. Is that what we're going to see with NVIDIA? I don't know. It seems like maybe we're in that position right now, but I have to tell you, this whole thing really scares me. I wonder, maybe I show my age when I say, do people not watch the movie The Terminator and understand what all is going on here? And I think we need to be very cautious going forward and really look at what kind of regulation goes around this and what that's going to mean for the growth of AI going forward. I just think there's so many unanswered questions. I don't think you put all your eggs in the AI basket, but you have to have exposure knowing that it's going to be part of the future.
What you just said just reminded me of that line from Michael Hartnett of Bank of America going into the weekend. If you're going to lose your job and be replaced by AI in the next few years, you might as well own some AI as a hedge, no? Andrew, I think a lot of people might be on that page right now. Andrew, I've heard people look for a rotation away from the winners, a change of leadership in this equity market. Where's that change in leadership going to come from with these things developing on the screen?
Yeah, well, look, first of all, one thing I would point out is, yeah, we're very focused on stocks like NVIDIA right now, but, 90 of the 500 stocks in the S&P are at 52-week highs. That's 20% of the S&P. So there are a lot, and it's not just all tech, healthcare, industrials. So I think energy is the only area that doesn't have a stock 52-week high. So there's a lot of ways to generate return in equities without just chasing what we're all focused on today. The other thing I would point out is some of these chip companies and semi-equipment companies are still relatively cheap, I think, and clearly they will participate. So there are ways to play the AI without just chasing NVIDIA. In terms of the broadening out, look, I think a debt deal to pivot here, the days when it looked like we were moving forward, the breadth was better. When in days like we were moving backwards, the breadth wasn't as good. So I think a debt deal would help areas like industrials, materials, some of the more cyclical areas. I could see a little bit of a rally in those areas because they are so oversold relative to tech.
Andrew, if I'm in the index right now, at the index level, in the S&P 500, like so many people are, is bad breadth, narrow breadth, bad news?
Well, that's a great question, Jonathan, because that's the argument amongst the bears, is that bad breadth is, a sign that we're on the precipice like the year 2000. And it is true that we had very bad breadth in 2000 before the market collapsed. However, when you look at the data, there's no conclusive proof that actually bad breadth doesn't lead to always a sell-off. Many times it leads to broadening breadth in the market rally. I think that will happen. I'm just not sure, other than short term on a debt deal, I'm not sure that will happen until we get past Labor Day.
Victoria, final word, please.
Well, I just think people need to be a little bit cautious here. Yes, just because we have a lack of breadth in the market does not mean that the market can't go higher. It can when we have the momentum and the sentiment that we're seeing, especially around the AI stocks. But I think we have to be careful if we're looking at a sustainable bull market. A lack of breadth makes that hard to happen, especially as we go into the later part of this year, where we're working through 500 basis points of rate hikes, a potential another rate hike, the consumer slowing down, earnings probably coming down. I think you have to position yourself with a little bit of defense in your portfolio in order to buffer some of the volatility that I think we'll see as the markets pull back in the end of this year.
The Nasdaq up more than 30% year to date. Right now, at more than 1%. Victoria, Andrew, to the two of you, thank you. Your equity market, about 7 minutes out from the opening bell, positive on the S&P 500 by 0.5%. Coming up, the morning calls in later. Clear Harbour's Aaron Cannon joining us at the opening bell to discuss the narrow breadth in this equity market and a record-breaking stock, NVIDIA, adding hundreds and hundreds of billions of market cap in just a few weeks. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Equities up big time on the NASDAQ. You can thank NVIDIA for that. On the S&P 500, up by about 0.5%. As the price action, here's some morning calls. First up, Jefferies upgrading Ford to a buy. $16 price target, seeing signs of improving execution during the automaker's investor event. Roth MKM upgrading Constellation Brands to a buy, expecting beer sales to start accelerating during the summer months. That stock is up by 0.8%. And finally, Atlantic Equities upgrading Coinbase to overweight, recommending investors shrug off the near-term risks with longer-term opportunities piling up. That stock is up by another 4.5%. Coming up, NVIDIA charging towards a $1 trillion market cap. The AI rush fueling another day of big tech outperformance. That conversation up next with Clear Harbor's Aaron Cannon. Your opening bell just around the corner.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Two-day winning streak on the S&P about to become 3 at the opening bell. Equity futures right now up by 0.5%. On the Nasdaq 100, 5 weeks of gains. We had some more weights at a rally around the open. The Nasdaq 100 up by 1.25%. One stock to watch, NVIDIA. We'll get it to NVIDIA at the opening bell. There is your open. Switch on the board and get to the bond market. Yields look like this, down about 6 basis points. Your 10-year, 374. A touch of dollar weakness out there, some euro strength. Euro dollar 107.34. That's after breaking 107 a little bit early this morning. Briefly, a 106 handle. That currency pair now positive by 0.2%. And crude just about holding on to 70. $70 and about 20 cents. Call it 30. We're down by more than 3%. We are about 25 seconds into the session. Equities up by 0.5% on the Nasdaq, by more than that, with the one stock to watch at the open, NVIDIA, rallying after unveiling a batch of new AI-related products. 404.86 is the level to watch. And Abby, we've got through that level right now.
Indeed, $1 trillion, the first chip maker to achieve that level. And for moments there, we went back below that 404.86, but right now the stock up well above that level, up above that key $1 trillion mark by almost $2, having to do with those new AI products that you were talking about, along with that blowout outlook, more than 50% above what the street had been estimating. And it just anything AI, this mania that we have, is driving this stock higher. But Victoria Fernandez made a great point when she was talking to you just moments ago. The valuation, it's crazy high on other metrics. EV to EBITDA, 31% above the group. Revenue to enterprise value, I believe it's like 13% above. So how long will this parabolic trend, up 30% over the last couple of days, last? It's unclear whether or not that will happen, but there is that $1 trillion mark for NVIDIA. And right now, this mania, it really has some takers, John. It's going to be interesting and fun to watch.
Phenomenal. That's a melt up in market cap. Just amazing. NVIDIA up by another 4%. We'll return to that name in just a moment. I want to turn to Tesla just briefly. Shares up this morning by about 3%, just short of 200. Elon Musk meeting with China's foreign minister early today. Ed Ludlow has more. Morning, Ed.
Yeah, good morning, Jonathan. Shares up about 3%, as you say. The meeting with Qin took place in Beijing. In a statement issued by the Chinese government, Elon Musk is quoted as saying that Tesla is against a decoupling of the relationship with China and will continue to expand its business in that region. Qin the foreign minister, also saying in the context of US-Chinese relations that it's important to get the steering wheel right, he said, and step on the brakes in time to avoid dangerous driving in the context of that relationship. Important because, as Dan Ives of Wedbush puts in his note, Jonathan, it's a good opportunity in the first instance for Tesla to take more market share of domestic sales relative to domestic peers in the EV space. It produces a lot of vehicles out of Shanghai, but doesn't sell proportionately as many of those in that domestic market. But of course, as well, an expansion of Shanghai is underway. As Bloomberg reported, according to sources, a new generation Model 3 is nearing the trial phase of production in that plant. So critical market for production, but as Dan Ives of Wedbush notes, a key opportunity to expand domestic sales as well.
Just out of interest, Elon Musk has been very open about his willingness to express his political views here in the United States, even if it costs him. Now, I just wonder whether the same applies to China.
Yeah, I think what's interesting to note is that this is Elon Musk's first known visit to that nation, to China, since before the global pandemic. They've continued to invest and expand their operations in that Shanghai plant. They are a large employer there. There have been tensions relating to issues of security, for example, around the camera and data sensitivity around camera imagery taken from the Tesla vehicles. But it's an area that continues to be important. And again, go back to the earnings call transcript and look at how many times the word China comes up.
Stock is up 4%. Ed, we'll touch base with you again in about 10 minutes' time. Elon Musk in China. Jamie Dimon heading to China as well. We're going to catch up with Jamie Dimon a little bit later on this evening on Bloomberg TV. So look out for that conversation. I want to turn to crypto-related stocks as well. Getting a boost as Bitcoin climbs for a 6th consecutive session. Katie Greifeld has more. Hey, Katie.
Hey, John. Well, it's hard to know with crypto. This could be a relief rally coming off of that weekend debt ceiling related news. It could be a knock-on of the AI boom. We know that crypto and tech stocks tend to trade hand in hand, but no matter the cause, the takeaway here today is that these crypto stocks are definitely rallying. If you take a look at Marathon and Riot, those are both Bitcoin miners really seeing a pop this morning. You can see that Riot there down at the bottom up over 10%, as is Coinbase really seeing a pop this morning. It was upgraded to an overweight at Atlantic Equities. Of course, Coinbase is one of the biggest crypto exchanges out there, and you see SoFi rallying as well. That could be more again about the debt ceiling. BTIG did say that the resumption of student loan payments should help that company. But what's interesting here, John, is that the rally that you're seeing in the stocks is greater than Bitcoin itself. Again, you can see Riot there up almost 11% at this moment. Bitcoin up less than 1%.
Katie, thank you. Big run there year to date for some of the crypto-related themes. Here's another one. Just looking at the Bloomberg right now, NVIDIA, $1 trillion market cap. Just today alone, we've added an extra $40 billion to the market cap of this company. We're up by about 3.6% right now, just pulling back from that $1 trillion line in the sand. AI-related stocks gaining across the board, though. Microsoft up just a little. Meta has been a standout year to date as well. Let's get back to Alex Webb for more on some of this. Hey, Alex.
Hi, Jonathan. Yeah, it's really a kind of blockbuster number they've finally been hitting. Interestingly, this is very much a pure play hardware company, deep tech. The other companies in this bracket are the Amazons, the Microsofts, the Apples of the world, all of whom have got a slightly different proposition. This is a cliche that has been invoked heavily over the past few days. It is the picks for the gold rush, but the crucial thing with NVIDIA is they have the picks today. They have them, they're able to sell them. That means that when the demand was there, they were able to deliver on it almost immediately. There are going to be other winners in this space. The question is whether they have the availability right now in the way that NVIDIA does, and that's clearly one of the reasons we're seeing such stellar numbers to them right now.
6 minutes into the session, that stock's up by close to 4%. The broader market on the S&P 500 up by 0.5%. The Nasdaq up by more than 1%. Alex Webb, thank you. The run continues. Big tech continuing its big outperformance and grabbing the attention of Wall Street. Deutsche Bank's Jim Reed going into the weekend saying this continued tech frenzy has caused the narrowest rally of the century. The S&P 500 now outperforming its equal-weighted index by the most since 1998. Citi Stuart Kaiser noting stocks can continue to rally. He said, quote, "Not all periods of large-cap leadership end poorly. There are 10 previous episodes when cap-weighted SPX beat equal weight by at least 300 basis points in a 3-month trading window. Markets were up in 5 of 11 cases and rose over the subsequent 3 months in 6 out of 10. Let's have this discussion right now with Aaron Cannon of Clear Harbor Asset Management. Aaron, great to catch up with you, sir. We've got to build on some of these big gains, and I guess the question at the moment, does this narrow leadership really matter? If I'm at the index level right now, hugging the gains, do I care?
Well, we work in the world of probabilities, Jonathan, and I think that, if you look over the course of history, narrow breadth tends to be problematic. And there are a couple of exceptions to that are worth noting in 88, 89, 94, 95. But since 1929, when breadth is as narrow as it has been recently, when I say narrow, we're talking about 7 stocks, 54% of the NASDAQ 100, 7 stocks, 27% of the S&P 500. And you look at the returns of the 493 stocks not represented, they're only up a little less than 1% year to date. And the S&P is up over 10%. Large cap, too, is up almost 10%. Small cap, looking through the prism of the Russell 2000, down less than 1%. So the breadth has been truly problematic for this market.
So when people start talking about setting up potentially for another period of U.S. exceptionalism, U.S. equity market exceptionalism after the last 10 years of FANG, are you pushing back against the idea we can do the same thing with AI?
Well, I think it's remarkable, and I still believe that if you look at NVIDIA, it's a wonderful case study in American ingenuity, in American exceptionalism from a technological perspective. And I think that we do have the brains, in the know-how, in the funding to continue to create these companies to add value to the overall economy and increase productivity as well. But it's also the case that we could be entering a period of economic deceleration. It appears as though that's what's happening, and maybe employment has peaked. And so I don't think it's a conflict of thinking that perhaps we continue to see slower growth here going forward. We could see some pressure on the equity markets going forward if this breadth finally falls by the wayside and we start to see a real correction in the market. But that companies will continue to wade through difficult times, capture market share. Those that are well managed, have great technologies, wide moats, certainly will prosper over time.
Aaron, you've mentioned that weaker growth, those disinflationary trends that you and I have talked about continuously over the last several months together. Whenever you've come on, you've always talked about that. And at the same time, I've had yields higher over the previous 11 days, not including today. I'm talking about pricing out rate cuts and pricing in rate hikes. Yields up, and it hasn't hurt the equity market story. Aaron, what do you make of that?
Well, I think part of it is just that this breadth effect. It has, for the vast majority of the equity market, been a point of pressure. But you are right. You look at the 10-year Treasury yield, it's up about 15 basis points year to date, and been marching higher over the last 2 weeks. Two-year Treasury yields as well. We've gone from sort of, Fed rate cut mantra for the next couple of months to, well, we may even have another couple of hikes here in June and maybe even in July. So certainly, points of concern here in the underlying market.
A lot of speculation. Go on, Aaron, complete your thought.
No, I was just sort of thinking, too, at the end of the day, too, we are seeing further evidence of inflation deceleration. I think the notion that we've gone from 9% inflation headline to 5% inflation headline, and it's going to be difficult to move from 5 to 2, and maybe that's the indigestion that many sort of bears in the market, and I don't consider myself a bear, far from it. I think in the short term, again, it's about probabilities. I'm concerned. I think in the long term, the equity market must outperform the bond market over a multi-year period, or else we're all in trouble here when you think about just sort of the capital stack in corporate America and around the world.
With that in mind then, given what you've just said, for anyone who's been sat in cash through much of this year, and they've been rewarded for that, given what the yields are at the moment, I can pick up 5%, hide, not pay attention to any of this. If you were allocating new capital today, Aaron, in this equity market, where would it go?
Yeah, I think you want to respect the rally on the one hand, which is contradicting perhaps my concern about breadth. And so, owning broad market is okay. And owning broad market ultimately means that the future winners in the market will accrue. And that's in a market cap weighted index. But I also think there are wonderful opportunities outside of the three sectors that have rallied year to date. And we know why those three sectors have rallied. You look at communication services, you look at consumer discretionary, you look at tech, and then you go back to those 7 names that we just mentioned before. That's why those sectors are up year to date. But there are some wonderful industrial companies that are, on the cutting edge of increasing productivity on the manufacturing floor. You look at the utility segment, everyone's looking at, electric utilities. How about natural gas distribution utilities? How about the water utilities? Lots of interesting ROE growth opportunities here and into the futures as municipalities say, you know what, we don't want to manage our water systems. We would rather outsource that to companies that are experts that only do this for a living and have done it very well. So, there are lots of opportunities in this market that we're very excited about. But we think about valuation and we think about the duration. How much time do each one of our investors have as it pertains to these investments? And we craft our asset allocations around that client. And that's what we're doing here at Clear Harbor.
One quick final question from me, one last question. 12 months ago, in the summer of 2022, if we had these kinds of equity market gains, Aaron, and I said if this was a problem for the Fed, overwhelmingly, I think a consensus view would have been it's a problem for the Fed. They need to get financial conditions tighter. They need to get inflation down. Has that view changed 12 months later?
No, I think the Fed, they got into the game late, and I understand why. They thought that it was going to be transitory in a very short duration perspective, and now they do not want to be accused of taking their foot off the gas pedal. And I think that's a real predicament for the Fed, and we understand why that is. But there are incipient reasons to believe that employment is starting to, you look at the JOLTS data, you look at some of the temporary companies that are in the business of hiring, things are softening there. We're at a historical low unemployment, but we're also seeing a lot of the, sort of supply chain woes trending through. And we understand that, at the end of the day, when you raise rates over 500 basis points, it's going to have an effect, but it's going to have an effect with a lag, and the Fed's aware of that, and the timing of all of this is uncertain. We believe at the end of the day that the Fed raises rates 1 or 2 more times and pauses, and then we eventually see cuts as the likelihood of a recession over the next 12 months becomes a little more obvious on the heels of weaker growth and weaker employment.
Aaron Cannon, a Clear Harbor. Aaron, always great to catch up with you, sir. Thank you. About 14 minutes into the session. Here's the name to watch right now. NVIDIA near session highs. Session's young, I know, 15 minutes into this session, but still up 6%, this name at the moment. A $1 trillion market cap, up more than 6%. Now, typically, I don't care about the round number stuff. Tom and I were talking about this earlier this morning on Bloomberg Surveillance. It's the manner at which we got there. The fact that we've added hundreds of billions of market cap in like several weeks. In fact, one session we did that last week. It's just been absolutely phenomenal. That name up more than 6%. Coming up, from Musk to Diamond, corporate America making their way to China.
Things will get better again. China didn't use massive stimulus or this paycheck program. We see some bumps here, but we think the overall journey to recovery is on track.
That conversation up next.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern. The moment news breaks, no one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say, we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
I would see recent April-May data weakness as a hiccup. Things will get better again. China didn't use massive stimulus or this paycheck program to jumpstart the recovery. So like other Asian economies, without that massive transfer program, you need time. So it's not a surprise. We see some bumps here, but we think the overall journey to recovery is on track.
Corporate America continuing its push into Beijing. The Tesla CEO Elon Musk meeting with government officials in hopes of maintaining ties with China. Wedbush's Dan Ives saying the visit comes at a key time, writing playing nice in the sandbox in Beijing is something the street is laser focused on to make sure there's no disruptions to Tesla's expansion. This is JP Morgan CEO Jamie Dimon brings his China summit back to China for the first time since 2019. Let's get to the team coverage. Ed Ludlow and Shanali Bassett join us right now. Ed, let's go to you first. Elon Musk already there.
Yeah, Elon Musk already there. First visit since before the pandemic. And, you know, the key development was his meeting with China's foreign minister, Qin Gang, you know, the ministry issued a statement which quoted Elon Musk as saying that Tesla is against a decoupling from China and that it will continue to grow in that nation. But it's kind of consistent with corporate America. Tim Cook visiting Apple in March, reiterating its importance strategically for the iPhone maker. Mary Barra, the CEO of General Motors, kind of talking about the need to work with local partners in China, it being a key market for clean energy vehicles. There is this growing narrative that contrasts corporate America's view of China with that of President Biden in this nation. The action of sanctions, for example, hitting NVIDIA's ability to export its latest chips to China, and not just here in the US, but in continental Europe as well. You look at what the Germans and Olaf Scholz have done, or the Dutch in joining with US chip sanctions against China. There is this contrast between the corporate narrative on the importance of that market and what political leaders are telling us.
Shanali, Jamie Dimon's turn. Up next.
It sure is, and this is a massive conference. We're talking about 2,600 people that are going, companies, investors. Remember, this is not only from China, this is also large corporations from the United States also going, executive CEO from the likes of Pfizer, Starbucks, while Morgan Stanley over in Hong Kong also has another conference with another 1,500 investors. So this is an insanely important market. Remember, not just for the companies themselves with an expectation of the market reopening, the consumer coming back potentially a little bit stronger here, but also this idea that there is wealth, serious wealth, John, accumulating in China, and these are big clients. These are big private net worth, high net worth clients at a time where JP Morgan, Goldman, Citigroup, all are big in China and growing those businesses to gain some greater returns at a time when their other businesses have been under pressure.
Shanali, is that still the place they want to be, or has that changed in any way, shape or form over the last couple of years?
Listen, anybody that was in China to begin with knew that it would be a slow, steady burn, that there would be fits and starts. And so if you've made the commitment and if you're operating at scale, you're not backing away. Though if you are not at scale and you're a smaller fund manager in the region, you are probably not sticking around for the economics less than the geopolitics. But the big banks, they're certainly committed to China, and there's no sense of them pulling back.
Looking forward to our conversation with the man himself, Jamie Dimon, coming up a little bit later on this evening, I believe 11:30 Eastern time, that taking place over in Shanghai. Shanali, thank you, alongside Ed Ludlow. For the broader price action, about 22 minutes into this, we're up by 0.3% on the S&P. The gains fade a little bit. On the NASDAQ, up by 0.8, call it 0.9% into positive territory. With some sector price action, here's Abby.
It's interesting, John, because we do, of course, have this gain for the S&P 500 and this feeling of a big rally because of NVIDIA, but we have more sectors trading lower, led by energy. We have a quiet sell-off, I would say, for crude oil, down 3.6%, just holding on to $70 a barrel. On the other hand, we do have tech sharply higher, up 1.6%, driven by NVIDIA and the chips and anything related to AI. Let's take a look at these stocks in this index over the last week, because it is a big rally. The stocks last week putting up its best week going back to November of last year. There's NVIDIA over the last 5 days, up 36%, an absolute melt-up, as you said before, parabolic. The question is, will these gains last, John?
Abby, will they stick? Have to bear in mind it's only May, so when we talk about year to date, we're not even halfway through the year, and we've got gains of more than 100% on that name and on Meta as well. Coming up, your trading diary, going into Payrolls Friday. Up next.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
"26 minutes into the session, advancing by 0.3% on the S&P. Day 3 of gains on the S&P. On the Nasdaq, up by about 0.7. The gains fade just a touch. That's the price action. Here's the trading diary. Coming up through the week, U.S. consumer confidence numbers at the top of the hour. Richmond Fed President Thomas Barkin speaking at 1 p.m. Eastern Time. We get the Fed's Beige Book on Wednesday. More Fed speak before the quiet period. Collins, Bowman, Harker, Jefferson, all on the agenda. And before we get to payrolls on Friday, ISM manufacturing, the ADP report, jobless claims, then the big one, payrolls, the estimate, 190K. From New York, that's it for me. Thank you for watching Bloomberg TV. This is Bloomberg.
Many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from and where is it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David, but COVID, you know, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, you know, COVID's enough of a change that I ought to be able to do something new.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employer's winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard In America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. he emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Wiener Gold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Wiener Gold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000!
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was